Hey, John, how you going, mate? Can you give me a thumbs up if you can hear me? Nice. We're just on a holding screen for now, so you can turn your video off if you want and flick it on when we're ready to go.
The question is intentionally rhetorical. Like, what the fuck happened in 1971? We're not asking because we know what happened in 1971, but do you?
To suspend temporarily the convertibility of the dollar into gold, to suspend temporarily the convertibility of the dollar into gold.
But the French led the way, and they said, we've had enough. We're getting your dollars, but we don't like them, and we want our gold.
Des dollars, au même titre que de l'or, entraînent les Américains à s'endetter et à s'endetter gratuitement.
And that's when Nixon put his foot down, and the saying was he closed the gold window, no more gold would come out. In a way, it's a declaration of bankruptcy that we can't, defend our position and pay our bills. And yet we've been borrowing the money and we've been fooling the people, and we've continued this process.
Once I knew my stocks and bonds were gone. I knew Satoshi Nakamoto was the...
Is that tax money that the Fed is spending?
It's not tax money. To lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. It's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak.
Don't panic, the price will rise and fall. Ultimately, we're breaking through the wall. Sky's the limit, and I'm in it to win it. So I'm just holding for the longest time.
Somebody asked me, what is the Federal Reserve System? And you've got 30 seconds to explain it. I can say, well, I don't need 30 seconds. I can do it in 4. The Federal Reserve System is a scam. Any questions? If you have the courage to read the Federal Reserve Act, you talk about boring, but it's all in there. The United States Congress passed a law which in essence was a cartel agreement for all the major banks to come together and share the market and control the market to their advantage.
The constitutional dollar is defined as a weight of gold or silver. The genius of the Federal Reserve Plan was it inserted a man in the middle in 1913 between the Constitution and the people in the form of the Federal Reserve. And that was the introduction of the Fed dollar. It's not the dollar that is defined by the Constitution. It's a note that's issued by the Federal Reserve.
The power to actually print the money is the basis for the whole inflationary system. Doesn't mean they actually print the money and spend it. That's what the Treasury used to do in the Civil War. But it's a more sophisticated way of doing it. They write out checks out of thin air, buy bonds with it, and then the checks or the deposits on the Fed then go out into the system.
Now that we have the Federal Reserve System, now that we have a means of creating money ourselves, creating money, the purpose of tax has become very narrow. We can fund everything we want to do simply by creating the money. We still need the tax primarily as a social mechanism, as a means of engineering society, as a means of control. That's what they have the taxes for.
Before every election, our representatives would like to make us think we're getting a tax break. And they're able to do it while at the same time actually raising our taxes because of a bit of magic they have in their kit bag. That magic is inflation. They reduce the tax rates, but the taxes we have to pay go up because we are automatically shoved into higher brackets by the effect of inflation. A neat trick, taxation without representation.
It's true that the money supply inflates. And so they think, well, the prices are going up. But in reality, it's just that the value of the dollar goes down.
In 1971, they removed the final link between gold and the dollar, and then the value of the dollar plummeted, and that expressed itself in very high inflation. But of course, no government has ever admitted to messing around with this currency, and it's always the fault of everything else in the universe. Well, the oil crisis in the Middle East, but of course, none of that matters compared to the monetary cause of it. So the price of everything was rising because the value of the dollar was dropping because they were printing dollars like crazy.
Throughout history, the only thing that has ever been discovered that stabilizes the purchasing power of money is a monetary system that's based on something that requires human effort to produce. Because human effort is the common denominator between goods and services on the one side and money on the other. If you don't have human effort on both sides of the equation, you don't have a real equation. It's not a mathematical equation, it's a social equation.
Free markets have been trying to zero in on absolute scarcity with whatever technology is available in the world historically. Like say it used to be seashells with a certain society for which seashells were rare, or the most scarce fungible thing. But as technology became more sophisticated, gold became that game theoretic backstop. Gold has the highest stock to flow ratio, has superior relative supply scarcity, all these things that basically cause it to outcompete all the other monetary metals and become global prime money, which it still is today. Central banks hold gold, they settle with finality in gold. People want to know that if I'm holding money, I'm holding something that's self-sovereign. It cannot be deauthorized, it cannot be reversed, cannot be inflated. The asset that I hold, it has value as determined by the free market.
The way that inflation was fought was not by reducing the printing of money, which is the root cause, but by providing massive subsidies to agriculture to mass produce food at a very low cost. There's a guy called Earl Butz, and he was put in charge of the agricultural program in the US. And he was given the express mission of making more food and making food cheaper.
Earl Butz responded by calling upon American farmers to plant fence row to fence row. And he told them to get big or get out.
In order to make the food so cheap, it was very low on nutrients and very high on sugar and junk. People talk about, well, there's no inflation because look at the CPI is 2% or 3%. And that's just completely ridiculous. There was a time in the US where you could buy a ribeye steak for $1, and then you could buy a burger for $1, but now you can barely buy a soy burger patty for $1. So if you look at it, well, look, there's no inflation. As long as you don't mind the difference between a ribeye and a burger and a soy burger, you know, you're still paying $1 for your lunch.
Mr. Bernanke, if you don't mind, would you tell me whether or not you do your own shopping at the grocery store?
Yes, I do.
Okay, so you're aware of the prices. But, you know, this argument that the prices are going up about 2%, nobody believes it. You know, and the old CPI says prices are going up at 9%, so they believe this. If people on fixed incomes, they're really hurting. The middle class is really hurting because their inflation rate is very much higher than the government tries to tell them. If you loan me $100 and in 2 years from now I gave you 90 back, you'd be pretty upset. It's theft. If I don't give you your full $100 back, if you loan me $100, I'm stealing $10 from you. So somebody's stealing wealth, and this is very upsetting. The Fed's going to self-destruct eventually anyway.
Fractional reserve banking is, in my view, is inherently bankrupt. I mean, it's always ready to go bust. The reason is fairly simple. Most businesses, or all businesses, as far as I know, try to have the time structure of their assets shorter than the time structure of their liabilities. Have the money flowing in before they have to pay the money out. With banks, however, just the opposite. Banks' liabilities are zero time structure. In other words, you have to pay immediately. I'm talking about demand deposits and banknotes. So all banks are inherently bankrupt. All of these for the public to find out about it. Essentially, it's a structure based on mythology more than anything else.
This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC-insured bank.
Going off the gold standard, and with the FDIC, the use of insurance, of course, is a euphemism. It means the government prints money and bails out the banks.
Wars are extremely expensive. All those troops and guns and fighter planes and drones and bombs have to be paid for. So how to raise the money to pay for them? One way the government does this is through taxes. The government just takes the money from the people.
Now all of a sudden you have to issue war bonds and people have to get behind the idea and fund it.
Get him, folks. Come on, skip right up and get him. any bonds today. Bonds of freedom, that's what I'm selling, any bonds today. Scrape up the most you can. Here comes the freedom man, asking you to buy a share of freedom today.
At a certain point, even the most pig-headed, rah-rah war lover will snap out of beast mode when he realizes the government is taxing him and his family into poverty to fund the war. So the government has a challenge. Is there a way for it to take the wealth of the people without them knowing it?
Well, with a fiat currency, you can just debase the currency immediately without any of the citizens having a vote to pay for the war.
Он в клуб миллионеров записан как банкир. У них он научился рычать при слове «мир». Печатает газеты с бульдогом интервью. Бульдог в них излагает позицию свою. И вот уже он избран на выборах в Конгресс. Приятно ход событий он как сенатор стал. Чего не может только наделать капитал.
Throughout history, statism has been imposed by an alliance of two groups. The state itself, the state apparatus, the king, the throne, and the opinion molding groups, the intellectuals, which in most cases in history have been the churches. And so this is known as the alliance of throne and altar. You have the church and the state. The function of the church was to tell the people to obey the state. The state is God in many cases. The king is God, and the public believes them because they're the intellectual opinion molders. And in return for that, the church gets part of the boodle. They get part of the state revenue in the form of tax, subsidies, and so forth. In the early 20th century, we begin to reform the old alliance of intellectuals and government, big government intellectuals, perform the function of court apologists for the new regime.
It is a wonderful thing for our businessmen and our manufacturers and our unemployed to taste hope again. But they must not allow anyone to put them back in the gold cage.
What gold means, and this is something that Keynes was incapable of understanding because he never studied economics. It's not because it's yellow and shiny, and it's not because any of these things that he thought about it. What gold means is that economic value can only be acquired by creating value to others. And that's why in a hard money society, everybody ends up working, doing productive things, because that's how you earn money. And that's the only way that you can make wealth. The alternative is that you have money that's easy to make. And central banks are able to make that, and they can make large quantities of it whenever they want. One section of society, government and people in government and people in the central bank, are able to effectively allocate value and wealth and economic resources, whereas everybody else has to work for it and earn it. And that's essentially a system of enslavement.
Breaking the dollar's peg to gold actually broke the intellectual character of our academic institutions. They're just no longer in reality. Keynesian economics reports that you can just print your way out of everything and government is omnipotent. Like in your textbooks, government is God. Just they don't suffer any opportunity costs. They can print money at will. They can change laws at will. It's a true delusion that we're living under.
Keynesian theories have made the subject of money feel so arcane to people that they feel like they just can't understand and they don't even want to try. And these ideas are not new. It's just that before Keynesian ideology was at the forefront, they didn't call it inflation, they just called it coin clipping or theft.
Overall, if you compare societies, periods when money is expected to hold on its value, that will incentivize people to start thinking of the long term. The reason to hold money is to provide for the future. And the better the money is at holding its value for the future, the less uncertainty you have about the future, the more likely you are to think of the future, to account for the future, to provide for the future. And this is an economic decision, but it also reflects on all kinds of personal decisions. You look at savings rates since 1970 in the West, they've collapsed down to zero roughly. People don't really save anymore. In the 20th century, the silly statistic that people have obsessed about is consumption. Just we need to get people consuming more. If we consume more, then GDP is up and then numbers are up. And if numbers are up, then everybody's happy and people get reelected. And so we've had this fixation of getting people to spend more, thinking of the level of spending as being the level of health. And that's just insane. If you sell your house and sell all of your stuff, sell all of your capital, sell your business, you can get your consumption up this month higher than it has ever been and spend it all on a big, massive party. Consumption numbers have gone up. You're rich. But, you know, what are you going to do next month? This is the incentive structure that fiat money and government supervision of the economy has incentivized. So you get these incentives that are rational, really, in this monetary system. It makes no sense to save money when your money is going to lose its value. Everybody borrows for their car, their home, their wedding. All of your major expenses you borrow in order to fulfill them.
Do you have money jitters? Ask the obliging Bank of America for a jar of soothing instant money, M-O-N-E-Y, in the form of a convenient personal loan.
Under a gold standard, it was different. People would save up money all their life. You know, as a child, you get born and you get given some money and you keep accumulating it. And then when you have a major expense, you bought it from your savings. In the current economy, money is the monetization of debt. Every time a bank issues a new loan, new money is being created, and so the money supply is being increased. And that's why this economy is so addicted to debt, because the institutions that issue debt are effectively printing new money. And therefore, you finance yourself from debt. And so now it makes sense to spend the money that you have to borrow and to pay off the debt because the money is losing its value.
We find a typical home occupied by a typical American family. Like millions of his fellow Americans, John Q. Public earns enough money to keep up the payments on a new car. He takes great pride in owning a fine, new, long-term mortgaged home that was built to last a lifetime.
When people have a low time preference, they're able to engage in long-term projects. When people have a high time preference, they can only think in terms of immediate gratification. And I think if you look at culture and art over the different periods, I think it's really hard to dismiss this. People like Michelangelo and Leonardo da Vinci and the masterpieces that they used to create when gold was money, you don't see things like that today. When you think about who are the major artists of the world today, but you know, a bunch of idiots drawing a bunch of nonsense on a bunch of mattress that requires the level of skill that a 5-year-old could do. The entire freaking masterpiece takes 15 minutes to finish and then gets sold for $50 million. And then you look at Renaissance art, and every single one of those pictures took years of skill and mastery for the artist to be able to arrive at that. I don't think it's a coincidence that eras of unsound money produce this kind of degenerate art, because people in this sort of society are unable to plan for the future and unable to think of the future. You can also see this with architecture. If you look around pretty much anywhere you travel in the world, the nice buildings were the ones that were built in the 19th century. And then the 20th century was the century of ugly industrial cookie cutter boxes that cram the cities and traffic jams and ugly highways. The city's been destroyed by central planning, by high time preference government policies, and people's inability to think about the long term.
Yet another building site in the East End of London. An East End rebuilt almost out of recognition to those who knew it before the war.
Its form will respond, we hope, to the way people want to live now with their equipment, their domestic appliances, and their cars.
People don't like taxes. They see a clear connection between government expenditures and taxes. It says the government says, let's increase public pensions. To finance this, we just increase income tax. Many people that are wage earners will probably not like it very much, but if the government increases public pension and then finances it by issuing bonds, these bonds are then monetized. That is, the money supply is increased to buy these bonds, and then prices increase a little bit. Then people will probably not make the connection.
Everyone, whether in the factory, shop, farm, or office, pays for the cost of government.
If there's economic growth, prices would actually fall. If the government is increasing spending, this can compensate for the fall in prices that would have occurred due to increases in productivity. The internet, new technology, or the increase in the division of labor. Thanks to the increase in government spending and the new debt and the monetization of the debt, prices don't fall, but stay the same or increase a little bit. So then people at the gas station will not say, oh, today I pay the same for my gas like last year.
All right.
Oh, we should do that. You know, there you've got the...
Got the wines, got the wines. Cool. All right.
Hello.
Hello, hello. So, thanks for joining us tonight, guys and girl. Cool. So I'll kick us off. So welcome to the Bitcoin meetup tonight. My name's Mike. I'm with Stone & Chalk. I'm the operations manager in the building. For anyone that doesn't know, Stone & Chalk is Impact Network. We're all about equipping Australian startups with what they need to succeed. So we have an office here in Adelaide, another one in Sydney, another one in Melbourne. We're all about just running events, networking, and helping startups get the capital and the expertise that they need to succeed. And yeah, it's great to host the Adelaide Bitcoin meetup tonight. So we've got quite a few guests. In a moment, I'll get them all to turn on their videos and give themselves a bit of an introduction. But basically, we've got Rusty next to me here. So Rusty, I'll read the official spiel. He's a globally recognized FOSS advocate and developer. He's famous for working with Linus Torvalds for the Linux Foundation and is now noted for his significant contribution to the Bitcoin protocol. So I'll get, Rusty, if you want to give us a bit of a further intro to yourself, mate.
Yeah, I'll what he said, basically. These days I work on Lightning, so trying to move sats faster is basically the spiel. And you know, I'm one of the many teams now implementing Lightning, working on the specification and the protocol and stuff like that. I work for Blockstream, who do a number of things, everything from mining to Liquid, inter-exchange platform, to a lot of research and Lightning development as well. I'm the only Blockstreamer in Australia though, so that's me in Adelaide. I'm Blockstream Australia. And I hold Bitcoin. and nothing else. So, you know, take any advice that I give with that bias in mind. Cool.
Great, thanks for that, Rusty. Next person we've got off the list is Jeff Yu. So Jeff Yu, he's the CEO of Binance Australia. So he's been involved in Bitcoin since early 2013. He's founded, led, and advised several Bitcoin and blockchain startups prior to heading up Binance Australia. More recently, he's the head of product at Travel by Bit, a Queensland-based crypto-friendly travel company. Later moved on to become CEO of Invest by Bit, launching Binance Lite in Australia in 2019, making it easy for Australians to buy Bitcoin securely. Jeff's passion is to constantly engage with the crypto community, from speaking at meetups, hosting local events, to advising and investing in startups locally and abroad to further the robustness and application of the Bitcoin protocol suite. So Jeff, do you want to flick your video on and give yourself a bit of a further intro, fill in any blanks I've left out, mate?
Hey guys, sorry, no videos today. I just have this little cute cartoon of that I think everyone would recognize this. They're pretty early on Reddit. Anyway, so hey guys, I'm Jeff. I'm the CEO for Binance Australia. So we are a Aussie exchange. We're all Aussie based here. Our team is all spread across Australia. So we are, we're striving to become the #1 crypto exchange in Australia. So we provide seamless, instant pay ID, deposits and withdrawal directly from Australian bank accounts. We have a couple of AUD pairs, and at the same time, we are backed by Binance, the world's largest crypto exchange by trading volume. So there's a full suite of products that you can try out on binance.com/AU, the best Aussie exchange. But anyway, so in terms of Bitcoin, I am a predominantly Bitcoin person. So people in the Bitcoin space might know me for my I started off pretty heavy on Twitter. I've been pretty busy lately, so Twitter's been pretty not a space that I update pretty often, but I should. Yeah, I'm happy to join you guys today. So just want to sort of share my perspective on complement your conversation here from a perspective of a crypto exchange operator in Australia. Thank you.
Awesome, thanks for that, Jeff. Great to have you here. And last, we've got John. So John Pratt, he's joining us. He's part of the Bitcoin Sydney group. So the spiel I've got here is since discovering Bitcoin in 2013, John has been a hodler and proponent of Bitcoin, attending some of the earliest Sydney meetups. 2018, after becoming dismayed by the profusion of altcoins, non-consensus hard forks, and irrelevant blockchains into the scene, he co-founded the Bitcoin-only Bitcoin Sydney Meetup group. He continues to organize community events. This format showed that it was possible to run a strong and vibrant local Bitcoin maximalist scene without those other distractions. Bitcoin-only meetups have since made a strong resurgence in other states. He also runs Australia's first Blockstream satellite-connected full node. So, John, if you want to give yourself a bit of a further spiel, anything I've missed, mate?
No, Mike, thanks for that, and good to be along here. Yes, that's pretty much it. So, so about the meetups, yes, it was very much the scene. I think many of us that were around at that time were all aware of how much the scene had got adulterated by just so much noise, basically, and scams and lots of other stuff. And so we thought, well, look, there's still plenty of stuff going on in Bitcoin, I think, to sustain a meetup, even in a bear market when some thought that we might have had to pad it out with that other stuff. And it turns out at about the same time that I was arranging this with another organizer, Harry Raab, Stefan Livera was starting off, had a similar idea. And so we joined forces because we already sort of had a good venue when we had a sort of a format with guests, much like what is being done here tonight in speaking slots. And Stefan had already started doing a couple of sort of drinks only events. And so with his profile and following, and of course what we were already doing, we combined our efforts, and it's turned out to be a great success, I think. And yes, about the satellite, it's something that I've always liked to tinker with radio. I've been interested in electronics. That was I should backtrack. Prior to Bitcoin, I suppose I was one of that sort of group of people that was an IT person. I think that was many of people in my demographic were attracted to Bitcoin, saw what it was all about. But another passion for me was electronics and radio. And so when I saw that Bitcoin, the idea of being able to connect to Bitcoin on satellite, I thought, well, that's a great merger of those interests of mine. And so I think I'm safe in saying I'm the first to get one going, because initially when I ran it, it didn't work, and the Blockstream team actually had to remote into the node and actually get it. It actually had to release a new version of the software on the strength of the fact that it didn't initially work on the C-band here. So they got it going, and we'll be doing a demonstration at the Bitcoin Bush Bash, which is coming up in early November. So we'll manage to get a smaller C-band dish that we can bring along and demonstrate that, and hopefully it'll be a bit of fun for all of us.
Awesome. Cool. Thanks for that, mate. And I think you sort of hit on the journey that a lot of people take when they sort of encounter this new technology, is they sort of see it as a, you know, they're not quite happy with the systems that are in place now. And you sort of see this new Bitcoin technology coming in and sort of as a big disruptor and a different way of doing things. And it just sort of sucks you in. And then you just get more involved. And then, you know, some of us keep going down that rabbit hole like you have, and then start running your own nodes. So I'm sure we'll all get there at some day. Cool. So I've got a bit of a update on sort of where we're at in regards to Bitcoin in 2020 before we sort of kick on to our key discussion points, which is where you guys will sort of take over and really lead the conversation. But obviously we're sort of in a situation where we're going to our last quarter of 2020. More and more people are getting interested in Bitcoin. There's quite a bit of hype around DeFi, decentralized finance. So we might talk about a bit more about that later. A lot of newbies trying to get involved in the scene, trying to find out a bit more, which is always good. In the end of the day, we all started out not knowing what the hell any of this stuff is. So we're starting to, you know, learn more, and, you know, events like this, and, you know, people like the callers on this chat today are the ones that are sort of leading the charge in that educational piece, so that everyone can sort of get involved rather than just it's left as this obscure fog of you know, techie stuff that people can't really penetrate into and get involved in. So yeah, the end of the day, Bitcoin it's a massively well-performing asset. It's the best performing asset class of the century. So it's got, you know, a lot of good stuff going for it. It's also obviously got the decentralization factor around it, which is awesome. It's apolitical. No one's going to be able to stop it, pull the plug. You know, they'll try as hard as they can, but we'll always find ways around it. And I'm sure Rusty can talk through some more ways around that a bit later. And yeah, at the end of the day, the Bitcoin protocol is running, and we're just going to keep going and keep developing and keep making use of it. And hopefully we'll just get more people involved, and it'll become more of a mainstream thing. Cool. So to take us through the conversation then, we've devised a bunch of different talking headings for tonight. We're going to start off with ease of use, so adaptability. Thank you. So what I'm going to get the people on the call to talk through today are the why and the ease of use and the adaptability of the technology. So what stage are we in that non-technical people can sort of understand and easily grasp the technology and its use cases before even sort of trying to buy into Bitcoin? You know, what would be that first step if you had someone who's in front of you who's trying to understand what Bitcoin is, how it works, but they're not ready to sort of pony up the cash and actually buy it? What would be the sort of first things that you would talk people through into that process? And, you know, talk through wallets and how it works and its performance, usability, and sort of the future use cases that can grow from that starting point. So I'll let you kick us off, Rusty, if that's good.
Well, I mean, I think, okay, so when you're talking about usability, it's always important to, you know, talk to the person's pain points, right? The person in front of you has particular needs or things they're interested in. You should obviously address that, right? The truth is that a lot of the Bitcoin use cases are nascent. It's really early. And so people come to you and they go, I'm interested in Bitcoin. And, you know, often it's, I'm interested in buying Bitcoin, you know, and that is probably one of the most polished areas of, you know, there's still hurdles, but, you know, you can go to an exchange, you can, you know, can't quite use your credit card, but, you know, you can do it. You can figure out how to use do a transfer and get Bitcoin, right? You know, at least if you want to hold it on the exchange, right? So you kind of, hey, in some sense you have Bitcoin at that point. And there's been a lot of incentive, you know, there's been a lot of work since the Mt. Gox days on making that process easier. So that's still the easiest Bitcoin experience is probably buying Bitcoin, right? In first world countries, though, it's really hard to point to that thing where you go, oh, average person on the street, here is what she is going to need to know. Like, so this is where Bitcoin is going to be the killer app for her. And that, in Australia, that just, from my experience, just doesn't really exist. And so when someone, I don't have people coming to me going, hey, I have, I want Bitcoin for reasons other than I want Bitcoin because price go up, right? And that's a pretty established path. So I think we're still in that kind of finding product market fit phase, right? Where there are a few things that we know Bitcoin is good at that most people can do, and there are other things that are still under development. The Lightning Network, of course, being particular, right? So, hey, we have this cool technology to send payments, but who are you going to send payments to? The other 5 people on the Lightning Network, right? That kind of joke. So, and there are places where that is really useful, and there are definitely uses for that as a technology. And there are definitely people who go, yeah, I have this pain point with international payments. So for them, it makes absolute perfect sense. But, that's still very, very niche as far as I can tell. But the way these things is, they start in niches and they grow outwards. But, I anticipate, things seem to improve over time. The Bitcoin UX is continually improving. For those of us who went through the old days, it's definitely getting better. We see the Lightning UX, same story, right? The early Lightning, C Lightning still basically CLI, but early, it was all for geeks to begin with, and then it kind of refines, and people who actually know how to create decent UX come along and produce something that doesn't suck. And we're at that stage now. I run the Phoenix Lightning wallet on my phone, and it's like, wow, this is actually shockingly easy to use. So we're definitely seeing those inroads. So it's almost, to some extent, we're creating the infrastructure for when people need it, and getting the exact timing right, producing it at the exact moment when people need it is kind of hard. So in a lot of cases, what we're doing is we're producing it now in the understanding that at some point it will be, incredibly useful.
Awesome. Thanks for that, Rusty. John or Jeff, you got any further comments around the ease of use?
What I'd like to add to that is that it's important to actually work out what actually constitutes using Bitcoin. One of the big schisms where this speaks to what I was referring to earlier was that a lot of people only thought that using Bitcoin was if you were spending it somewhere or using it as literal cash, like you would use cash out of your wallet, rather than cash in the more general sense, which is as savings. And so for me, the idea of Bitcoin and the way I present it to people, because that's the main interest area for me, is it's savings technology. So, and if that is how you consider using it, just as a store of wealth, or it's not as though it can't be used for other things, but its most important use case, in my view, is store of wealth. And so if you can simply buy that on an exchange and send it to a hardware wallet, you don't really need to do anything more than that with it in order to be using it as a long-term store of wealth. So it doesn't really matter too much about whether or not Lightning is user-friendly and whether you can spend it in shops and transact with it day to day. I mean, it's not as though we don't already have quite convenient means of doing that. And in fact, I think if Bitcoin, with the promise of its scarcity and where it could be in a few years in that respect, is if we're going to believe our own rhetoric on that stuff, then the last thing we'd want to be doing is using it in any way other than holding on to it and holding on to it with dear life. And that means essentially just putting it in a hardware wallet and leaving it there until one day you feel that, okay, I'm going to actually reward myself for my foresight and improve my life.
Yeah, what actually really interesting point on that, which you reminded me, is I'm really excited to see the stuff around multi-sig. This becoming much more normalized, much more convenient, multiple hardware wallets, stuff like that, was pretty esoteric even like 6 months ago. And now this is the forefront of where people are going, doing multi-sig conveniently with yourself rather than, multi-sig was previously, sure, with an organization, there's 3 of us and whatever. But now making it normal to have single user multi-sig is something I think is fantastic, because we've seen the UX in that has always been awkward, but it's definitely getting better. And I expect that to normalize. And that's exactly for that use case where you want to keep it secure.
Can you just explain what multi-sig and that sort of this esoteric tech, it might seem esoteric to you 6 months ago, but it's still probably esoteric to some of us here.
So normally to spend your Bitcoin, you need a signature from a single thing, a single secret, basically. But Bitcoin has the ability to do much more than that. And one of the most obvious things is to do something like, we need 3 of 5 signatures, for example, to move these coins. That was originally a fairly obscure use where you'd only use it if there's a consortium of us and, you know, we need to do something like that. But it's also a really great way to store your Bitcoin. And Stefan Livera did a really good podcast on like 10xing your Bitcoin security, where the person whose name has slipped my mind at the moment made a really compelling argument for why this should become the norm. And of course, it actually is for all the reasons that were outlaid. So, you know, if you're talking about a significant amount of Bitcoin, you know, your life savings, for example, this is becoming a lot easier to do. So, you know, that way, if something goes horribly wrong, you can lose, say, 2 of your 5 factors and still have your money. So you can be a lot less paranoid. The early story of Bitcoin was basically paranoid people, the story of paranoid people and loss, pretty much, right? And so, you know, as we see UX improve, as we see our experience improve with how to do these things, that story has become much, much better.
Yeah, and as yeah, sorry, go ahead, mate.
Yeah, I think that's all very good points. Like, I come from a product background, so I think it's very important for, you know, like, for example, Jack Mallers, right? We come out with like simple UX for people to interact, because we deal with a lot of the first mile users whereby, what do I mean is that a lot of people's first experience with Bitcoin is through a centralized exchange, right? So because realistically, a lot of people, they wouldn't be too bothered about the intricacies of why Bitcoin matters upon like the number goes up until they have vested interest and skin in the game. Then they start to think about like why it matters, and then it goes down way more, right? I have a couple of friends that start off, you know, using a lot of, you know, we're playing with a lot of alts in early 2017, and then slowly I just went, you know, here, read the Bitcoin Standard, and a couple months later, you know, they regretted tattooing like altcoin prices on their body, right? So that's kind of the way that I think the progression would be, is that people always come to interact with centralized exchanges, play with a bunch of you know assets and products that they want, and then you know move on to become more you know proficient, and you know and then go on to more advanced understanding, and also like you know self custody, running your own node, doing you know multi-sig for self custody and sort of stuff. So our role here is to ensure that the first mile journey is safe. You know, at the same time, we want to make things exciting, but we also want to make sure that it is within the realm of, you know, consumer first, user first, to make sure that it's not just easy, but it's also safe for newcomers to come on board. That's why we not just focus on making sure that the flow between the traditional money, traditional fiat, into your buying your first Bitcoin is as seamless as possible. But it also make sure that we provide, you know, education content for you to follow up in your own pace to read up why, you know, what is Bitcoin, you know, what is transaction fees, you know, and stuff like that. So I think we all complement each other. But I deal with a lot of, I would say, from newbies to veterans alike, and I think exchanges do play a big part of it to sort of narrate and shape the viewpoint for a lot of users coming to the space.
Excellent. Thank you very much for that, Jeff. So yeah, and I think John said it right. You know, one of the easiest ways to talk about the ease of use and sort of easing someone into the technology is, you know, if you've got someone who's got a passing interest in it, encourage them to just, you know, buy a little bit and just hold it. You don't have to be this person that's constantly checking graphs and you know, watching their balance all the time. You know, help them to learn enough to buy a little bit, put it on a hardware wallet, and then just forget about it. Honestly, it's a good way to just help them with that first step into the tech. Cool. So we'll wrap up that first pillar there, and we'll move on to the next topic, which is scalability. Before we do that, though, we've just had Alex join the call, which is awesome. So Alex Svetsky, he's the CEO of Amber.io. So I'll give a bit of a spiel onto his background, and then he can jump on and fill in any blanks I left out. So Amber.io, it's a cutting-edge exchange wallet and micro-investment app. It's all in the palm of your hand. Their mission is to make exposure to Bitcoin and the new wave of digital assets as simple, low risk, and automated as possible. We're taking the bad habit of spending all the time and transferring it into an option for the future by investing the spare change from your daily purchases into asset classes with extraordinary upside. They're the first Bitcoin and digital asset company in the country to be backed by a major Australian university. In 2018, they were one of the few companies in the world who raised $1 million seed round without an ICO, and likely to be even fewer with a product in market, generating revenue and growing daily. Our focus for 2019 and beyond is scaling the product and helping 1 million people around the world get exposure to Bitcoin by the year 2022. Alex, mate, if you want to just, you can turn your camera on if you want people to see you. Otherwise, give yourself a bit of an intro, mate.
Hey, buddy. I don't know who the hell gave you that rundown, because that's like the old one from 2018. Anyway, I'll update it by just saying, we're a Bitcoin accumulation app. Simple as that. I ain't giving people exposure to shit other than Bitcoin. And yeah, we're just dollar cost averaging. We don't do the spare change stuff anymore. That was old. That's why I think this is really, really old, because we dumped the whole spare change thing at the beginning of 2019. But anyway, yeah. So glad to be here.
Cool, mate. Awesome. Good to have you here. All right, let's kick on to our next topic, which is scalability. So what we want to talk about now is the current state of Bitcoin scaling solutions, particular focus on the Lightning Network, which I know that Rusty is quite in tune with. Talk about the tech, the improvements, the incoming updates, because obviously scalability is something that needs to make sure that is nailed for this to become more of a global force and sort of disrupt things a lot more than they already are. So Rusty, do you want to take us away? Maybe just for us less in tune, fill us in with what the Lightning Network is and anything else around the scalability of Bitcoin.
Okay, wow. So scalability in Bitcoin. Bitcoin is like, the nature of Bitcoin is that everyone validates everything. And that would be completely impossible without Moore's law. I mean, making our machines so incredibly fast that we can even think of creating such a system, right? So it's amazing that it works at all to some extent, right? That you can have all these independent nodes around the thing, checking everything. But it's, it gives you a degree of assurance. You can run your own full node. It's actually really easy to do. You can run on a little Raspberry Pi about that big. And it will check every single transaction that has ever occurred on the Bitcoin network and give you personal assurance that it has validated everything and that everything is kosher, right? And that's pretty amazing. But of course, it means that by definition, every transaction is being checked by everyone in the world. You've got a scalability problem at that point. And this was, in fact, the very first time Satoshi posted to the mailing list saying, I've got this idea, I've got this thing called Bitcoin. The very first response was, but it's not going to scale, right? How's this going to scale? Right? Because that's the obvious problem with this novel solution of proof of work and having this thing. But that is what gives Bitcoin its properties, right? So if you break that, you kind of break Bitcoin. So then the question is, well, how much can you pump through the system before the thing starts to fall apart? And there is a cap on how much you can do in the system. There was a workaround a couple of years ago called segregated witness that basically moves some things out of that cap. Kind of the same way, like if you've got a word limit in your essay and you really can't get enough words in, you shove everything in an appendix. This was kind of the same solution, right? So that was SegWit. We shoved some stuff out of the appendix, but we didn't shove random stuff out there. The stuff in the appendix is only needed to validate the block, and then you can throw it away afterwards. And there are other good reasons to do that. And we decided, okay, the appendix is only like worth a quarter, so you can have kind of 4 words times as many words in the appendix as in the main text, and we're all good. So we did get like a scalability increase from that. In effect, it kind of about a 1.8 times scalability improvement in the amount that we can do, but still, just fundamentally, the system is constrained, right? So from the very beginning, there was this idea of like, this will be the main Bitcoin on-chain network will be like the backbone of the network. And there will be other systems that work on top. The most obvious system is in fact an exchange, right? When you sell and buy on an exchange, they don't transfer Bitcoin between the two of you, right? They just change money in their database, and right. So that is one way of doing a whole heap of things off chain. And then, when you withdraw, then it's a transaction, right? So that's one. That's probably the first way that people use scalability. But there are ways of doing it that are less trusted, right? An exchange is a classic for being a problem, both from the fact that somebody else is holding your coins and the fact that the regulatory environment is questionable, and the exchanges are global, so you don't even know often what regulatory environment they're dealing with. And it turns out that a lot of people have accidentally lost their Bitcoin or been hacked and things like this, right? And you can never tell. So holding your own coins is definitely a good idea, but can we have both? Can we have you hold your own keys and you've got control, and yet you still have things on this other second layer? And there were a few kind of ways of doing it, but they all had really bad trade-offs until the Lightning paper dropped about 5 years ago, showing a way of doing this in a fairly trustless way. And since then, there's been this effort by multiple teams to implement and improve the original Lightning concept. And that's something that I work on. That's my day job, both as I was originally the chair of the SPEC sort of organization. I've kind of stepped back from that, but I'm still heavily involved in the SPEC. We rotate the chair now. So yeah, so there's a specification and there's an implementation. And these days you can install a Lightning wallet and you can basically send Bitcoin to anyone else with a Lightning wallet in, sub-seconds, right? Which is pretty cool. And the thing about that is that you are actually holding those coins. As soon as they arrive, you're actually holding them. It's like cash, right? Credit cards only take seconds, but they take seconds because they're not actually transferring money. They're transferring IOUs, which most of the time is good enough, except when it's not. And then you realize you don't actually have the money, right? Whereas with Lightning, you actually have the money. You send me the money, I ship you the goods. It's as if I'm actually holding the cash, right? It's a bearer asset. I'm holding the Bitcoin at that point. And that's a pretty spectacular achievement. So as far as scaling up goes, there's levels of scaling up, right? On chain, we've kind of hit the maximum we can fit in every block on the Bitcoin network. So can we squeeze more transactions in per block? And the answer is yes. There's a proposal called Taproot that basically lets us squeeze more transactions into, or more importantly, squeeze more complex transactions into a smaller amount of space, basically, which is really good. There's a paper that I was reading on the way here called Music 2, which describes a really good scheme of basically doing having multiple people sign off on a transaction, but it still looks like a single key. So it's basically a very small on-chain transaction that also coincidentally looks like every other transaction on the network. That is really exciting for Lightning and everything else. So at the base layer, the effort is all about squeezing more transactions into the block space we have, right? And we have a few ideas on how to do that. This one's coming out, and there's a few others. And on top, the action on the Lightning Network is making it more robust, making it more secure, making it more private, which is a continual battleground, trying to make sure that you are not revealing every payment that you make. And interestingly, there's a logical sweet spot here. You really can't send you literally can't send a single Satoshi, which is the smallest divisible amount of Bitcoin, over the Bitcoin network today, because there's a thing called dust limit, which says that you can't have an output less than, I want to say 400 and 500 and something. Like there's basically a de minimis output. No, below that, you're going to have to spend more to spend it than you would get from it. So you can't send that, right? So when you talk scalability, you also need to think about scalability down, right? Now at the moment, a Satoshi is like what, 1/100 of a cent. So you don't really care, less. But at some point that may become a real restriction, right? It's really useful to be able to send a couple of cents to someone, right? And the Lightning Network lets you do that as well. So it lets you do things that you couldn't even do on the Bitcoin network natively, or at least sensibly on the Bitcoin network. So it opens up a whole new realm of low-end possibilities, scaling all the way down, which to me is really just as exciting as the whole idea. Yeah, we can do more transactions and everything else, but we can also do transactions that no one in the world could really do before. The flipping 5 cents into the busker's jar is something you couldn't do over the internet, right? And now we can. What can we do with it? And that low end scaling is kind of exciting to me because it's something new. We haven't had it before. The problem with building something new is you don't know what people will do with it. So I'm kind of like, well, it's out there now. And so I'm waiting for someone to come up with this killer idea where they go, this will be fantastic, and run with it. So there's scaling up and there's sort of kind of scaling down too. It's exciting for me anyway.
Great. And yeah, so and as you say, it'll work until the value is so high that even that minimum unit will be too much to let go.
Yeah, so the Lightning Network actually does its accounting in millisatoshis, like thousandth of a satoshi, just because we're ready for the future, right? But also it turns out that if you're taking a tiny fee, you actually need to do sub-accounting below the satoshi level. So obviously when you finally go to close out or whatever, the Bitcoin network will only let you take whole satoshis, so you end up rounding at that point. Rounding down, in fact, any change it becomes a tip to the miner, but it's a sub satoshi, so no one cares. But accounting in the Lightning Network actually happens on a thousandth of a satoshi. Yes, there are 100 million satoshis in one Bitcoin. The network, in fact, knows nothing about, the protocol knows nothing about Bitcoin. It knows about satoshis. Everything's done in satoshis. Bitcoin is kind of presented to the user. It's like, well, let's kind of give it 8 decimal places, why not, right? But that is kind of a completely user thing. At the base level, everything's done accounted in satoshis. So, yeah.
Great. Any of the guys online on the call want to have further comments on scalability?
I'm glad that Rusty went over all of that, because it's really this scalability issue is one of the most common attacks that Bitcoin gets, usually from the shitcoiner, BSV, non-consensus hard fork crowd. But what they don't tell you is they've got their very unsophisticated solution to that problem, which normally involves just increase the block size. What they don't tell you is the enormous compromises that come along with doing that, and that is centralization. Virtually all of these other coins that are proposing to solve Bitcoin's scalability problem through their drawback is that they have a hugely greater degree of centralization than Bitcoin does. It's simply the fact that if the blockchain were to, if the block sizes were allowed to get larger, it would make it much harder for individual users like myself and anybody else who wants to run a full node to actually do so, such that you would only end up with very large data centers doing that. And that's exactly what you do have in most of these alternative coins that are trying to do everything on the bottom layer, trying to shove every transaction into the bottom layer, trying to do all of these other things. They lose the very thing that makes Bitcoin unique, and the very thing that Bitcoin could do and was the first and only thing to be able to do. We've got plenty of systems that if you want to be able to spend money, do many transactions a day, we already have plenty of systems to do that, but a way of completely decentralizing money we didn't have, and there's nowhere where we're going to sacrifice that by increasing the block size. The best way is to scale the technology like every other technology is being scaled in layers. The internet works like that as well. Not everything is just done on the hardware layer or on the lower layers of the Bitcoin protocol stack. It's things are abstracted away, and so the Lightning Network and the things that Rusty just talked about are excellent examples of the way in which we're making the best, most efficient use of the block space we have. And so we don't sacrifice the things that make Bitcoin really important and revolutionary.
Yeah, actually, like I have a question for John or Rusty or Alex, right? It's okay, this is my dilemma with Lightning. Like, you guys know how big of a proponent I was Lightning. We pushed Lightning payments to Brisbane Airport pretty much just like a few months before it went alpha, right? So pretty reckless. I've lost quite some Bitcoin on reckless movements on Lightning before static balance backups was a thing. So the thing about from an exchange perspective, we deal with user demand, right? We respond to user demand, right? That's like the real business how we run. The thing about Lightning is that even with the promise of lower fees, higher scalability, apparently not a lot of users care about that. What is your thought on that? Could be the reason. Is it not enough people talking about it, or is it just that not enough good wallets around to introduce people to, or is it just that people don't care about? People like to talk about, people like to attack Bitcoin on fees, but actual users don't really care too much about it. What do you guys think about that?
Yeah. So this is I have never believed the whole Lightning and exchanges story because for me it doesn't make sense. I mean, if you're a trader, it might make sense. I can see like you put your maybe you pull your money off the exchange every night into your cold wallet, and then you push it back up in the morning to trade around like crazy and everything else. But generally that doesn't make sense, because you kind of got to leave it on the exchange if you want to have positions and things, right? You want that to happen all the time. So it's not critical to you to move the money back and forth. And also, Lightning really shines at smaller amounts, right? If you're moving significant amounts, if you're a significant trader, then you're already kind of out of bounds, right? You're out of the core value proposition of the Lightning Network, which is to move small amounts fast, right? So I've never really bought the whole, every exchange should support Lightning kind of deal. I've always thought, nice if they do, I guess. But exchanges always struck me as kind of the last people who really should care about Lightning to some extent, right? Imagine if you're onboarding a user, if a user comes along and they want to buy some Bitcoin, they're basically gonna, here's once a week, maybe they push Bitcoin to themselves. Setting up a channel for that single flow once a week, that's only one way, they're not pushing it back, turns out to be a really bad fit for Lightning. So I don't criticize any exchanges for going, Lightning isn't really interesting to us. And but that's really important in the larger scheme of things. Any technology, you should be able to honestly assess and go, that doesn't work for me now. Not a problem. It's up to the technology to improve to the point where you come along again and go, oh, actually, now there's a reason for us to do that. Otherwise, it's a religion, not a technology. And Bitcoin is a technology as well, right? So, for many people, Lightning's that, it's interesting to play with, but I don't have the killer use for it yet. And the exchanges one never really, for me, and never made a huge amount of sense. But maybe there are cases where it does, but I don't see it.
Thanks,
Awesome.
Rusty.
Great. Any other comments on scalability before we move on to our next talking point?
I can just confirm Rusty's point, because I mean, we don't really run an exchange. We run our app's more a brokerage, by functionality. But yeah, we always get asked questions about Lightning and stuff like that. And I'm like, well, to me, it's not interesting because we just don't have a use for it. So I can, from actual experience, concur with what Rusty said. So yeah.
Awesome. All right. So now I want to talk about security and privacy. So obviously high on people's concerns when you're when you're discussing cryptocurrency. The media is obviously rife with random little stories about exchanges getting hacked, people losing their hard drives, which has got all their Bitcoin on it, and ridiculous stories like that. And you're not sure if it is all about a big smear to try and drive people away from the technology, scare people away. Could be, could not be. But I think it's worth just having a chat about security and privacy around the technology. So overall, how are we progressing in terms of protecting the privacy and the security of people using Bitcoin, transacting with Bitcoin, exchanging it? What are the new updates in Bitcoin's tech stack, such as things like Taproot, Schnorr, CoinJoin, Multisig, and any new developments in the hardware space, such as hardware wallets? Any recommendations, any shout outs, anything that you guys are finding is, the next big thing that you guys are, getting involved with? Who wants to have a go talking about security and privacy in Bitcoin first? Go to maybe Alex. Do you want to talk us through, what you guys are doing in terms of security and privacy for people using your services?
I mean, again, we don't really fall into much of that, category. From a privacy perspective, we've been all the chain analysis guys have reached out to us and tried to say, you should use our service, and we've got no interest in that. The way we structure our orders and purchases is we do everything, we batch all orders, and then we send out to users. So we're fundamentally, that's it's not CoinJoin, but it's it's out of these big pooled wallets. So there's no it's not like other DCA apps which might go directly to the customer's wallet, where there's a direct provenance of all of the coins. So I don't know, we're not really a we're simply an accumulation app. I try and keep the process as simple as possible because the people that I'm trying to service from our business are genuinely newbies who, they're not going to be trading. They're not looking for shit coins. They're not, crazy CoinJoin advocates or whatever. Again, I personally CoinJoin. I personally do all that sort of stuff myself. And I guess when people are on that journey themselves, that's something that, everyone should be encouraged to do. But I don't know, man. It's going to be an interesting battle. I was on a call with the guys from HCPP, Hackers Congress in Prague, the other week, and there was some Monero guys on there, all talking about, what's more important between privacy and, verifiable, verifiable supply cap and, being able to validate at any point in time, how much Bitcoin there is and where it is. And the argument that we ended up having was, where we diverged in our argument was the Monero guys fundamentally believe that privacy is actually more important in order to quote unquote take down the establishment or make a change in the world in the way money and finance works. And my argument was that whilst that is extremely important, the way to win this battle and actually transform the financial landscape is to build a financial network that is permissionless, open, and has more economic mass than anything else, because of attributes like a fixed supply. And what that'll mean is along the way we're going to have probably some privacy scares. It's going to be messy and all that sort of stuff. But on a long enough time horizon, it wins out as as effectively the internet, the central bank of the internet, which is fundamentally open that anyone can go and build on, et cetera, et cetera. And then I think all the privacy stuff will just have to be, by nature built on top, layer 2, layer 3, whatever the fuck happens there. Again, I'm not technical enough to know what that's going to look like, but just intuitively and logically speaking, we're not going to solve it on the base chain. And, in life, people who think there's only solutions are stupid. There's only trade-offs. And the question is, if you do go down that path, of like, privacy only and privacy first, at the expense of, the more important attribute of, I guess, verifiability, or cheap verifiability, if, that's probably the better way to put it. I think we're going to shoot ourselves in the foot. So yeah, I hope clear minds prevail. And, again, we sort of don't mess too much with that stuff as a business. Like, we just want to help build the overall economic mass behind Bitcoin by, automating the funnel of, fiat shitcoin through to Bitcoin. Simple as that. Like if we can do that and create, as many Bitcoin, proponents as possible and holders, then, the economic mass of Bitcoin will, win out in the end. So that's sort of my 2 cents.
I would just add to Alex's point that I think that as Bitcoiners, we put a lot of emphasis on privacy, but the general public, I don't think for most people, they really care that much about privacy. If you look at what they're willing to give away on social media, for example, we put a great deal of focus on it, and perhaps through and particularly the Monero guys, their whole premise of their entire coin was to obfuscate entirely the traceability of transactions. But yeah, nevertheless, if you look at what the general public are doing with social media, they really don't care. And I think so, and particularly if Alex said, if he has a product where he's attempting to get noobs into something that is ultimately for their use case, a form of savings, and they're not likely to be particularly concerned with privacy either. Now, that's not me saying that it isn't important. I think they should care, but dealing with what is, whether it was more private or less private may not get us that many more people orange pilled than we think it does.
Yeah, so security is interesting, separate from the privacy aspect, right? Making it more secure for people is something that definitely has been happening over time, and we're definitely working in that direction. It's gotten a lot easier So, hardware wallets exist, for example. Like I have a first edition ledger. It doesn't work anymore, unfortunately. But, I bought one of the first edition ledgers when I paid like 1 Bitcoin for it. So I didn't get the gold, or whatever, the metal one. I got like the plastic one, the cheaper one. But, because I invested it because it was a cool idea to have this hardware wallet. Now that's a pretty common thing. Like, and there's the second generation hardware wallets. It's all really come along, which is fantastic to see. So, a security story is definitely getting better. Our privacy story is more nuanced. In an open society, people care less about privacy in a lot of ways because, they don't feel threatened, right? But that can change disturbingly quickly. And there are places in the world where privacy is much more important than it might be if you're sitting in Australia and you happen to be like a heterosexual white male who's middle-aged and, whatever, right? It's like, I don't actually, there's nothing interesting in my life anyway. So, there's just really not a huge, I don't feel this urge, but that's a really privileged position, and there are a lot of people who are not in that position, and those people will definitely care about privacy. And then maybe there are times in my life where I would care about privacy a lot more, right? So it's much more difficult to kind of quantize. But the thing that gives me hope for privacy is actually that is a completely technological thing. And that is, I talked about the fact that we're going to try to cram more transactions into blocks. And one of the tricks for doing that is to basically reach out to a random person and combine a transaction with them, even though you have nothing to do with them, in a way that you produce a single signature that covers the whole transaction. Now, this is a hypothetical future thing, but definitely something we want to do. And that would be cool because the transaction would be smaller. Like, the combination of the two would be smaller than both of us doing it separately. So there's an economic incentive for us to do this, right? It's going to be cheaper. Block space gets expensive because there's a limited amount of it, but we can save money by combining together. But it also happens as a complete side effect to be much better for privacy, because now it's much harder to analyze because you're taking random transactions from random people, squeezing them together, and that is what appears on the blockchain. So for completely technological reasons, I anticipate at some point privacy will not only get easier, but be cheaper than not being private. At which point people start to care, right? There's a small number of people who already care, but everyone else starts caring when it saves the money.
Yep. Well, that just comes back to this whole thing is driven by economic principles and primitives. At the end of the day, just like you said, dude, it's it won't be fundamentally like. There's a smaller proponent or smaller component of people where that high degree of privacy is important, but there's probably then of that bunch an even smaller degree of people who will actually be able to do it properly, and not botch the process in the first place. So like when there's an economic incentive to make it more private, and like you just said, then with outputs and everything being mixed, etc. But there will also probably come a time when there is even an economic an externality like an opportunity to run a business and be paid in Bitcoin and not have to pay a state tax. In which case these economic realities will come. But the thing is, we're just too early for that to happen yet. So all of these decisions fundamentally will be economic in nature or praxeological in nature, like that. And and this is why Bitcoin is the dominant, not something like Monero. The reality speaks for itself.
Awesome. Thanks for that, Alex. Before we move on to the next topic, I do have just like a bit of a follow-on question, just to marry the sort of, we just talked about security and privacy, but then bringing it back to the scalability side of things. It goes without saying that a lot of, your big international investors, your big multinational companies have benefited from having their transactions largely private. Completely private, away from the public eye, which allows them to, operate and potentially not act in the best interest of their customers and the people of the world. Do you think that you might think in the first case with Bitcoin, having less privacy will drive away your individuals away from the technology that are hoping to use it for dastardly means? But do you think that in the scalability factor, it could also scare away your actual big, massive multinational companies from adopting it because of the same reasons.
Yeah, so it's interesting. So Blockstream's first product was a product called Liquid, which is basically designed to move Bitcoin on a different security model, but move Bitcoin between exchanges, right? And the very first keynote feature that went into that was basically this zero knowledge technique to hide the amounts that were being moved. You can still prove that the amounts add up, but you can't prove what the actual amounts are. It's clever crypto. It's really clever. It makes things a lot bigger, and it can't go into Bitcoin in that way. But it's a fascinating idea. And this was driven not by the fact that we like privacy, which we do, but in fact by a number of big customers who really, really, really wanted this feature because they want to be able to move money without getting front run, right? Without other traders seeing what they're moving, right? And so this was a really killer feature for them, that the idea that you could have a network that could still be verified by everyone, but they weren't publishing every move before they do it, right? So I know for a fact that exchanges, and you talk to like any large institutions, that this is a concern for them, that putting everything on a public blockchain means giving up some of their advantages. And it's not nefarious. It's just that there are certain when you decide the time between making a decision and executing it and publishing the fact that you've executed it is critical for a lot of these things. And there are absolutely other actors out there who will take advantage of that knowledge if they can get it early. So it's in your interest to keep your cards close to your chest. And so so this technology is actually actually really important at the high end as well. So I don't think that so privacy, turns out, is actually a universal concern. So it's not just a few niche people. And if you get the balance right, and privacy is the default, or very, very, very cheap, and this is something we wrestle with the Lightning Network, then most people will leave it on, right? Frankly, if privacy costs you like 3 cents a year, nobody's going to turn that off, right? So as technologists, it's our job to make to make these defaults, to make these trade-offs in a way that the user will go, right, that's a price I'm prepared to pay.
Great, excellent. All right, we'll move on to the next topic then. So we want to talk about merchant adoption of Bitcoin. So we're still in the very early stage of SMEs wanting to accept Bitcoin and sort of use it. When we start to see some businesses in the landscape start to accept Bitcoin, but it is still largely in the online only space. The physical storefront adoption of Bitcoin is still very limited, and obviously very, very stuck in certain countries and certain cities within those countries as well. So what are your thoughts on the stage of merchant adoption? And I guess we also want to talk about the current state of exchanges. So I might get Alex to talk through that in a moment, and Jeff as well, talk about the current state of exchanges from a Binance perspective. So Jeff, do you want to kick us off with just like how things are going in the general landscape of exchanges from Binance's perspective?
I speak for Binance Australia. So our Australian users has, we've seen actually very good growth despite, everything's happening in the world. In fact, I think, everyone, being at home and, you start to see that with fiat, people actually, don't have control about, irresponsible fiscal decisions that are made for them. So this is what that we've been talking for years. And then when people actually see it playing out in front of their eyes, they are, I think it's it could have converted a lot of people from there. Like we've seen a user growth, like from Q1 to Q2, like it's like something like 220% growth. Like it's crazy, and it's still growing. So I would say that the interest in Bitcoin is always going to be on the rise, right? And with recent news of big companies like since MicroStrategy, that Square, is all these big multinational listed corporations that are putting Bitcoin aside as a reserve asset. I think that would just legitimize a lot of people's worry about what is this magic internet money? Should I invest in it? How much money should I put in it? And I think having an exchange, having a I don't want to sort of encourage people to just exchanges or centralized exchanges are good, right? obviously, like that's not the point I'm trying to make here. But I think that unless we have more, easier on ramps to decentralized exchanges, and also maybe even a more peer-to-peer kind of activity, obviously the user experience that a centralized exchange can provide might trump a little bit on some of those other options. But I would say that like we just want to be an infrastructure provider to support the the fabric of anything that has to do with crypto in Australia. So whether it's just being a backbone support, whether it's just being on the front, we don't actually mind. Like what are we here for? Is just to make sure that when people start realizing that like I need to put some money into Bitcoin and I need to sort of diversify my asset, like I'm gonna be operate my personal treasury as how Square did, right? For example, put like a few percent of your net worth into Bitcoin. And we want to be there for people to go like, hey, it's easy, right? It's not intimidating. I think like Alex is doing a great job, right? His app is really good for beginners. Much more so that like an app experience that's just simple like that. It has its advantage over like an exchange that we have to offer so many other products on the side. So I think we are me and Alex, right? We run exchanges or so-called brokers. We are the first line of defense when newbies come and interact. So I think even though we don't want to say that we are important, but I'll say that whoever that has that kind of influence and the kind of user base have to uphold some kind of responsibility to make sure that we provide a promise to be a safe and a very not just easy to use, but most important, a safe platform. And that's how I operate the business. That's the focus, right? We come up we think it from a user's perspective. Yeah, that's my thoughts.
Great. So yeah, overall your strategy is just one of being that sort of facilitator at the end of the day, because that's at the end of the day that's what an exchange is. So you just want to be able to facilitate the overall long-term growth and viability of the tech. The other thing we've noticed quite recently is there have been some large companies that have started to hold a bit of their reserves in Bitcoin. So which I think really helps to legitimize Bitcoin. And I think who was it that did it recently? It was a big one.
So MicroStrategy led this.
Square.
No. So okay, but I realize people are excited about MicroStrategy. There's a couple of interesting analysis of MicroStrategy as kind of this failing business that had way too much cash, which I think is a little bit unfair. But they definitely have not done stellar things in the last few years. They were sitting on a big pile of cash. This is a very flashy move. It's very big. But you've also got to realize that they were also prepped for it, right? They were already a software company. They were familiar with this. They were familiar with issues of security, stuff like this, right? So they were kind of pretty well primed and they had a whole pile of cash they didn't know what to do with, right? Apparently it's unsexy to give it back to stockholders, pay dividends. So call me old-fashioned. So they went into Bitcoin. It was a big move. It was like over $400 million US. So that definitely got headlines and got a lot of attention. Square then announced that they were doing 50 million, but again, Square is already dealing in Bitcoin, right? So Square already hold Bitcoin for their for their day trading. They basically just increased their float to 50 million and said, hey, we also did 50 million, which is something like 2.5% of their cash on hand. So they're basically it's encouraging, but it's a token thing. Now these two companies were kind of uniquely placed, and Michael Saylor, who's been at the helm of MicroStrategy for since 1989, so he's been around for a while, has a reputation for doing a little bit out there things, right? So while it is a bit of a lead indicator, it is also, if other companies were to follow this, it will usually take them longer to figure out how to do this, right? Neither of these companies, for example, is keeping all that money on an exchange or in a third party. They're hosting it themselves. Is that a scalable model for most companies? Possibly not, because while I'm talking about security increasing in Bitcoin, it's still another thing to have like 3 people on the board figure out how to self-custody $250 million US, right? That's still a bit of an ask, right? It has definitely sparked discussion at this point. But even if it had even if it is the beginning of a wave, expect 6 to 12 months before, if you do this move, you have to get your board approval, you have to get everyone on board, you have to get comfortable with it, so this is not going to be a thing that happens tomorrow, right? So there's a lot of enthusiasm about these moves, but you've got to realize that we're talking about one company that's, that's really done a big thing, who are already an outlier. And whether or not that's the beginning of a business trend, we can't tell. So I think it's really interesting. I'm actually halfway through an interview that he gave with on what Bitcoin did, which he sounds like he's definitely knows what he's talking about. But again, the reason it made such a splash, and it made a much bigger splash, it wasn't widely reported in the business news. It made a huge impact in the Bitcoin circles, but it didn't actually have a huge news impact outside that. And that's what cautions me to go, okay, well, is this really a signal or not?
I just don't think we're at the right part of the hype cycle yet. I think when the Bitcoin hype cycle picks up, which if it goes like previous ones, it might well be that even minor news will get reported on in regards to Bitcoin. But right now, the media, I don't think, is paying a lot of attention to Bitcoin.
Yeah, and of course that can cut both ways, right? Because if boards start talking about this, everything else, then we have this hype cycle, but it takes them 12 to 18 months to get approval, then we're down the other side of the cliff again, right? And suddenly they're like, we don't want to touch it now.
But I think, though, it is
lock them out for another 5 years.
It is the sort of adoption, though, that as someone from my perspective who looks at Bitcoin as savings technology, it is the sort of adoption that really matters. The adoption that the Bcashes and the other altcoin is, their only definition of adoption is that, is it being accepted by merchants? And that's a really sort of 2013, 14 type narrative. We've moved beyond that and realized that, again, what was happening even back then, when there used to be that big push, even by hardcore Bitcoiners, to get Bitcoin accepted by merchants, is what really was happening was that there was a payment processor involved. The person would spend Bitcoin, it would go to the payment processor. The payment processor would settle the merchant in fiat, and the payment processor would dump the Bitcoin on the market. So it was really just tantamount to dumping your own Bitcoin, which isn't good for the price and isn't good for the long-term game theory of Bitcoin. And because the greatest driver of Bitcoin adoption is number go up. People want to buy a thing that's going up in value. That's what they want. They want to get into something that they see overall is going up, not something that, no matter how many people are accepting it, is going down because people are dumping it essentially by spending it at merchants. And that's one of the reasons why, among other things, is why Bitcoin is doing so much better than these other coins that attempted to run on a use case that involved spending rather than saving.
A caveat to that, I think if you actually did manage to create a circular economy, so not
sure, yeah,
and you definitely get through that. But yeah, getting it through that bootstrap phase is something that no one has managed yet.
That's the thing. It would take until we get past the point of establishing Bitcoin as the dominant worldwide store of wealth, as a huge currency. Then we can look at circularizing the economy and maybe spending it, because it will have, or do the graph the other way when people are watching, it will have already reached, it would have soaked up as much of the world's capital as it can, or at least it will have very much, the rate of increase will have tapered off. So the incentives will be different then. They'll be better aligned to make it worthwhile someone choosing to spend it.
Cool. And I mean, just to bring it back to the physical space again, so, for a lot of lay people to get them on board with Bitcoin might involve, literally making it viable in terms of bricks and mortar stores and using it in those sorts of things.
Yeah, but that's also the hardest case, right? You've already got really good solutions. If I'm face to face with you, we actually have really good payment solutions already, including handing over like folding notes and cleaning.
Yes, it's a lot easier.
that works really, really well. And so that's like the last thing. I've always thought that's the last place that Bitcoin, eventually at some point, you go, oh, cool, I can use this in person. But it's a really weird case. Cases, now look, it's not that there aren't cases where that makes sense. If you're in Colorado and you're running like a marijuana dispensary and you can't get banking services, then totally that makes sense, because it's way easier than dealing with cash. And we're seeing inroads there. So there are definitely niches where that makes sense, but generally face-to-face doesn't make as much sense as payment over the internet. Like it's a native internet currency. Payment over the internet is kind of like the first stop. And I think the first thing that comes to people's minds. So yeah, I expect that to be mainly where it takes off.
What are your thoughts on the name of them has slipped my mind, but they're these little physical tokens that you can load up with Bitcoin, and they're sealed, and then you hand them over, and then you unseal them and can withdraw. Does anyone know, what are they called?
There have been a number of different like physical Bitcoin coins that have used these kind of tricks over the time. And of course, it's really trust-based, right? Because you don't know if the person who put the private key in there kept a copy, right? And then, of course, you're like, well, what if I open it and it's actually been water damaged and they didn't keep a copy? Like, what's worse? It's a classic, kind of security trade-off. So they were novelty for a while. There were some coins that were distributed, but outside the novelty value, I never really quite understood what that was about.
Yeah, I think the novelty value does add value though, because like the first time that I actually went like Bitcoin is a real thing was that I saw Cassatius coins. You guys still remember those coins? They were beautiful, right? It's the first time that I ever see Bitcoin exist in a physical form, even though it's not really what Bitcoin is, right? But same thing with merchant adoption. Like I don't think setting up a business for the sake of pushing for merchant adoption is it makes sense, right? We have done firsthand to understand that. And we have never started it as a profit kind of thing, because while I was in Travel by Bit, our main business was running a travel company, right? And for the whole Lightning payments and merchant adoption side of things, we were doing it for the sake of actually boosting up awareness about the stuff. Because every time we have meetups, when someone actually sees someone paying with Bitcoin, even though sometimes I go like, I'm just gonna buy this Bitcoin back eventually, but the fact that like I can get people go like, wow, this technology is real, right? It converts so much better in terms of like it makes them click, rather than just having people talk about this technology all the time online, but they have not seen it represented in real life before. But it's kind of like yeah, maybe you can say that those people are not the right people to understand Bitcoin, because they would just squander that Bitcoin away once they bought it. But I think it's a learning process. Like if we don't get them through that door, they would never get, or it might take a longer time for them to realize and have that final touch point to say like, this is what I want to do with Bitcoin, right? Like John says, like eventually it will become a savings technology. So I think, and also to John's point, right? I don't think merchant adoption is putting a lot of self-pressure on Bitcoin. Like realistically, the number of traders are putting much more in terms of, because for every buyer there's a seller, right? So I think the more market activity, it actually helps the price discovery better, right? The more market that there is. But I think merchant adoption really is a blip in the radar. It's so small at the moment, and we have not seen really it grow. Like I remember in 2014, there was a big movement, right after that first run up to 1,000, and then GOX happened. But because of that, people start, doing that whole, Bitcoin ATMs and accepting kind of stuff, but eventually died down, right? And in 2018, 2019, after the 2017 boom again, it came back up again. So it kind of just feels like it's just people trying to sort of make sense of the technology, and the way that they are able to do so the most is actually see it in physical form. So that's my take. Not sure what you guys think about it.
Yeah, I still give people like $5 in Bitcoin if they're interested, right? It's just I'll send them some Lightning Bitcoin. My only advice, it used to be like I would set up a wallet and everything else. My advice is take a picture of their seed phrase, because they will lose it, right? Just especially if it's your friend. Like I actually send my seed phrases on a Signal group with a number of my coworkers. So we're not all going to lose our phone at the same time. So someone will have the goddamn seed phrase from my petty cash wallets, right? For my like $100 or something. If they really need you, they can steal the coins, whatever, right? Who cares? But more likely, I'll drop my phone in a lake and I'll have lost it. So yeah, I'd strongly encourage you to kind of demonstrate, give people some Bitcoin, kind of set them up and just and show them that it's real, because I think it does solidify the discussion. Otherwise, we could be talking about penny stocks or something else, right? It does kind of ground them in what this thing is, but yeah, that doesn't necessarily mean that. Again, it's like that is a required thing that you need to be able to do with Bitcoin. If you can't move it, you can't invest in the first place. There can't be any of this other thing, right? But it does feel like it's too early. right? It feels like that part of the Bitcoin story isn't there yet. And sometimes that's frustrating as a Lightning developer, right? I'm like, oh, fuck's sake. But yeah, you've got to build it before it can exist.
Yeah, and that whole topic of making it feel real is just so important for bringing more people into using it. And you said yourself, Jeff, that you see these sort of physical transfers of Bitcoin as being a bit of a novelty, and it absolutely is. But you can definitely foresee, and a bit of a pessimist in me is foreseeing a future where cash is banned, but then you'll have that appeal of something physical, something gritty, and if you can have that, that single-use credit chip that's got Bitcoin on it that you're physically handing to people, is just like that cyberpunk future is like what a lot of people are sort of getting into it for. They sort of have that idea in their mind.
Yeah, actually, I've had a lot of trouble trying to convince my 6-year-old to accept any Bitcoin so far. He loves cash. He's like, he loves having money that he can count and things. Haven't worked him on the Bitcoin thing. I've kind of started seeding the whole idea of inflation in his head though, so we might get there.
Yeah, so that's one way. When they ban cash, you want to have the backups ready to go to get people into Bitcoin that have they need that physical that physical angle. All right, cool. We'll move on to our next topic. So we want to talk about nodes now. So I'll probably be leaning on you for this one quite heavily, John. Yeah, how easy is it to set up and run your own full node? What are the things available to the public to sort of, if they want to go down this path? Are there any guides? Are there any websites? Are there any sort of groups that people can join?
I'm probably not the best person to ask about that in a general sense. My specialty was actually setting up the satellite connected version of it. I did have help initially setting up the Bitcoin core node software on a Linux virtual machine, and it wasn't easy then to get all of that, the software side of that going from when I collaborated with the person who helped me do that. However, I do believe that there are much simpler ways of getting that going now. And in terms of recommending an outfit that can help get you up and running with a Bitcoin full node, I'd recommend the Ministry of Nodes. It's run by good friends of ours in Sydney here, Kitan and Stefan Lavera. And so that's, again, Kitan will be working with me at the Bitcoin Bush Bash when we do a bit of a node afternoon, then eventually segueing into the satellite stuff. So, yes, so difficult, I think Linux isn't everybody's cup of tea as well, but I do understand that there are much simpler solutions out. But in fact, Rusty, maybe you could fill in here something I think on Windows now that will let someone run a full node off essentially double clicking an exe to set it up, I think.
Yeah. So what I found really interesting is people started like shipping hardware nodes. I mean, Casa did it for a while. It's a bit of a novelty, but it's become a thing. I recently got like the Bitcoin Embassy, which is like this little, your private, it's like Citadel server kind of idea. It's still really early, but it has a Bitcoin node on there and it has some other software. It's very, very easy, very point and click. There are, we're increasingly seeing this stuff like the Raspberry Blitz and other things, kind of these one-stop shop that's your full node and your Lightning node and other interesting software bundled for you on this physical device that you can kind of trust. So it's interesting
to build it yourself.
Yeah, well, that's right. I mean, you certainly can build it yourself, but it is much easier to kind of go, okay. And there is, I think, a price point at which that will become like, oh, for God's sake, I'll just pay my $40 and I'll get one of those. We're not quite there yet, but I can definitely see that happening as well. You get one of these and plug it into your network, and away you go. Is probably what we'll end up with.
Before we get too far down into the ins and outs of running a node, can you just fill in for the lay people what is a node, and what are the benefits of running a node, and sort of what's the holistic sense of nodes?
Oh, okay. So a node is basically the Bitcoin software that checks everything. Now there's a full node which basically literally checks everything, and then there are other levels of nodes that trust to some extent that no one else is lying to them, right? A full node is kind of seen as the gold standard in Bitcoin. A full node will literally start downloading the Bitcoin blockchain from 2009 and check everything and work its way through. And a couple of days later, it'll go, good, it's all there. And from then on, it's ready to go. Although it operates in a kind of degraded state until then. And that's like the gold standard. That is literally your node has checked every single Bitcoin thing and you're good. And the reason this is important is that the miners can create new blocks. It's really, really hard to have to solve this really difficult puzzle. they can only do one of them every 10 minutes on average because it takes a lot of work to do it. But the node not only checks that they've done the work, but make sure that it actually is valid. They're not spending someone else's money, all these other rules. The miners can't, no matter how much hash power they have and how many machines they have, they can't break the Bitcoin rules. And a full node checks the rules as well. Now you can have a light node that just goes, well, the miners did a lot of work for it, so I'm going to assume it's good. And that mostly works until it doesn't, right? If enough people were running those, then the miners will go, we can start breaking the rules and no one will notice, right? Full nodes keep them honest as well. So you run a full node for your own assurance. It's always good to do once and go, great, cool, I've made sure I really do own the Bitcoin. My node has actually made absolutely sure that those Bitcoins were genuinely mined in a block and they generally went through various transactions and they are now owned by me. Yes, that is proof, right? It's like checking your gold. You can't really bite your Bitcoin and see if you dent it properly, but running a full node is basically doing an audit on yourself to make sure the entire Bitcoin network is there. Your coins are actually paid to you. But from a bigger sense, right, more people who run Bitcoin full nodes, it basically takes power away from the miners. So miners can't just make up the rules for themselves. The miners can produce valid blocks, but if they produce an invalid block, all the full nodes will go and completely ignore it. And that's how Bitcoin works. So Bitcoin node is good to run because it's good to run for you to make sure everything's kosher, but it's also good for the network. If most people are running Bitcoin nodes, then there isn't even the temptation in miners for them to ever try to break the rules or sneak something in because it wouldn't work anyway. So those two effects are why Bitcoin is so hard on. We should two things. Everyone should run a node, which means that we have to make nodes easier to run, right? It has to be trivial. It has to be easy. It has to be fast. It has to be one click as much as possible because the more people are running nodes, the less incentive there is to try to do anything nasty on the network.
Yeah, I'd also add to that as well that, well, first of all, running a node, I can tell from my own experience that having it using a solid state hard drive, that's a non-mechanical hard drive, makes it a much less frustrating experience to get working because it is very initially, when it first starts out, very computationally, disk IO intensive. When it's downloading, not only downloading the blockchain up to date, but then verifying all of that. So the huge number of IO operations makes, in many cases, a mechanical hard drive quite a frustrating long-term and time-consuming experience. I might just also add the purpose of, in case people are wondering what this satellite thing is all about, there's probably the point in the discussion to raise that. One of the reasons for it, and it's not really something I think that in Australia yet we have that much reason to worry about, but it's the idea of it is that it allows you to keep your node connected to the Bitcoin blockchain without having to have an internet connection. In fact, the latest update of it allows you to download the entire blockchain. Of course, it will take a very long time, but it will do it. It'll backfill the blockchain.
I think it's about a week. It's not like it's long, but it's not.
Quicker than I thought because I had to do it initially when I first set it up. You had to download using the net first to get the blockchain up to the current point, and then you could go onto satellite and get each progressive block. I think it was capable of maybe backfilling a few, but not
24 hours. Yeah, it used to be a 24-hour rotation, but now, yeah. We stream it. I think we stream it over a week.
Right, and the idea here is that imagine a scenario. Perhaps you were on an island where the internet connection to the island was not particularly reliable, and you had a Bitcoin economy running on the island. And if the island was to become disconnected from the internet, then a sort of a separate fork of Bitcoin would end up occurring on the network, on that island part of the network, the cut-off island part of the network. And so what might then happen is any transactions that had occurred on that segmented section of the Bitcoin blockchain might end up becoming orphan transactions and essentially being rolled back and not having been recorded on the real main Bitcoin blockchain at all. So having the satellite node allows you to keep connected, always getting the latest blocks, and therefore then the cutoff part of the island internet community can mine on top of blocks that have been properly created by the main part of the network. And also, of course, censorship resistance. If you were worried about, if you were in a regime where internet traffic was being looked at closely for Bitcoin-like node type activity, you can have a dish tucked away relatively discreetly and again remain connected to running a full node without revealing that sort of internet activity to an unsympathetic government body.
So yeah, so Blockstream, who I work for, run this satellite service, so over existing TV satellites, basically. And yeah, we have no idea how many people are listening, right? You spray a satellite signal down, you can't tell who's got a dish. So anyone can set up a dish and attach it. We've actually recently released a kit that's like a all-in-one kit. So it used to be, you have to buy these parts and hook it up and do everything.
Which, as far as I'm aware, Rusty, it's not that kit because it comes with a flat panel antenna, and I'm not sure that will work in Australia.
It doesn't work in Australia. Yes, that was going to be the next thing I was going to say.
Okay.
Yeah, unfortunately, not for us yet.
Yeah.
But for the rest of the world, yeah, you can basically just get the kit and flat panel antenna. It's basically just looks like I don't know. It's about yay big, and you kind of roughly point it, goes yes, 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 and done. It's not even a dish as such anymore, and that just spits out Bitcoin blocks for you.
So for people that are wondering, there's two main bands of satellite transmissions, KU band and C band, and those really big old dishes that you sometimes see around, that's C band. It's a lower frequency, and it was used very much in the Asia Pacific region for free programming, often Philippine news programs and things like that. And you do still, they're called big ugly dishes, BUDs, and typically the only dishes that you can obtain in Australia, because they were for television that way, are enormous. Mine happens to be 2.4 meters and it's on the roof of the house. But of course you don't need that size. It's just that just happens to be the sizes of dish that are readily available. However, we did manage to pick up a 1.5 meter dish the other day. So that's the one that we'll be able to set up portably in November. But,
Nice.
But normally, of course, the KU band will operate on a much smaller dish, typically the sizes of the Foxtel dishes you tend to see now attached to buildings, which are in the order of 50 to 70 centimeters. But for some reason, maybe Rusty, why Blockstream chose to only broadcast C-band to this region, but KU band everywhere else?
No, I don't. But I know that we're in the area that's covering most of Asia. So it's obviously like a decision to basically cover Asia, and Australia was kind of a side effect. And South Australia is kind of the worst case because we're kind of down the bottom. So you have to point it almost 45 degrees to get signal here. Yeah. So it is actually, Adelaide is actually a bit marginal. You need a decent size. You used to use a decent sized dish. The other cool thing about the satellite is actually if you really want your satellite connection fast, you can actually, in most places in the world, see two satellites and aim two dishes at separate satellites and combine the signals. You'll actually you can reconstruct the signal twice as fast if you're getting twice as much. So, and there's also like a fast and a slow band. So, if you get a better connection, you will get your data faster. You will get your blocks faster and things. So, yeah, and as you kind of alluded to, John, we have been kind of revising this service and kind of improving it. Originally, you had to start your node and then it would keep it up to date if you were there. But if you ever fell out for more than 24 hours, you'd have to get an internet connection and reboot. Now you can actually start from nothing. And we do actually repeat the entire Bitcoin blockchain in about a week over the satellite connection. So if you really have to, you can do it completely without an internet connection these days, which is actually pretty cool, I've got to say.
Well, as well as that, in some cases, downloading, what is it now, the size of the blockchain, it's 400 gigabytes or something. It's not a trivial amount of data. I mean, it might be if you've got a fast NBN connection with an unlimited plan, but in many rural communities, that's
You said the words fast and NBN back to back. That's
well, it's better than the ADSL I had. Put it that way. It's not. Yeah, it could have been so much better. I agree, but I know though certainly in some rural communities where they don't have access to even something that was like and there might be data caps and other places in the world.
Yeah.
Half a terabyte. Yeah, that's not necessarily a tenable thing to be downloading.
Yeah, and that's the thing. I mean, a satellite is also flat cost. Once you've got the hardware, you get as much as you want, right?
So that idea of being able to download the entire blockchain, I think that's increased the use cases for the satellite enormously.
Yeah. But on the other hand, I can probably mail you a copy of the blockchain in less than time that it would take to download. But yeah, again, the charging issue and everything, and accessibility is definitely huge. So yeah, it's something we wanted to do for a long time, and we finally got it. I mean, basically you pay by bandwidth for satellites, right? We had to justify increasing the bandwidth that we were getting through the satellites, which cost us real money. So, there were, if Bitcoin price keeps going up, we can justify more of that, I guess.
So if I wanted to run a node from my house, I've got a decent, I got NBN connection, as good as it can be in bloody Australia with our gimped internet. But I've got some spare Ethernet ports on my router. If I wanted to go out and get a Raspberry Pi and a 512 gigabyte SSD, plug it into that, and hook it up, what would be the best way to go about that if I wanted to do that, right now?
Yeah, go to Ministry of Nodes and look at their setup. Like very much, here's how you know nothing. Here's how to start, kind of thing. That's what they do, help you set up your node, and it's pretty easy. It really is. Or drop it to someone. The way I set up a node is I clone one of my existing nodes and just make a copy and then go from that, rather than downloading the whole thing again. But the easiest way is I would go to Ministry of Nodes and look at their stuff, and they will walk you through that.
And do you think there's any companies out there currently working on like a mail out package where they literally send you a Raspberry Pi in an enclosure with an SSD, maybe with a blockchain, up to that point of shipping already preloaded, and then it just needs to be, topped up when it gets to you?
So that's what Casa did. They switched out the Casa node. There's also, I know, the Bitcoin Embassy, which I grabbed recently. And they come not only with the Bitcoin node, but other software that might be interesting as well for you, like a Lightning node and everything else. They tend to come and go. Like it's a really cool idea, but then people discover actually it's quite expensive to ship hardware and everything else, and normal stuff. So
novelty.
And it's a bit of a novelty. And then they, how do you make money, kind of thing. So it'll be interesting to see as that evolves. So I don't have one that I can point at the moment. This is definitely the one you should get. But I know there are a few out there. I tend to impulse buy them. I'm like, oh, I should get one of those, right? But it's still like $200. It's not like a trivial, $50, I'll just do it, right? So I'm like, oh, okay, $200, do I really? No, it's tax deductible, fuck it, I'll do it. So I'd still point you at one of the online guides like Ministry of Nodes. And
cool.
And go there.
All right, awesome. Okay, let's talk about development. So it's the last major topic I've got for us tonight. What is the current state of developers working on Bitcoin? How are we maintaining the continuous development and improvements of the Bitcoin protocol? What are the new developments in Bitcoin and Lightning for the next several years? So I'll let you kick us off on that one, Rusty. Obviously, that's your ball game.
Okay, the next several years of Bitcoin development. Here we go. Let's just cover that, right? So I think John alluded to this. Bitcoin doesn't move fast because if we put something in Bitcoin, we've got to maintain it forever. And if we break it, we don't get it back, right? Bitcoin's a bearer asset, which means that you're literally holding it. If you manage to fuck things up, like if you manage to fuck up the Bitcoin network, that's it. The hope for actually decentralized digital cash is probably gone for another 20 years. So it tends to be like move slowly and surely. If you want an improvement, you better make damn sure that you really, really do want it and everything else. So things in the Bitcoin world work through these, very kind of almost glacial stages. You've got to make absolutely sure it's completely robust. Well, we've been talking about Taproot, which is the next major upgrade coming along. We've been talking about it for 3 years now. 2 years since the first concrete proposal. There have been a number of refinements since then.
Just talk us through what Taproot is.
So Taproot is this new construction where basically you can, it's actually a bundle of it's a bundle of improvements, all good, that basically make it so that a lot more transactions look a very simple transaction, and only in exceptional circumstances do you need to reveal that it's actually hiding some other part of the transaction. So this is again towards the whole, let's try to cram more transactions in the space we have. And Taproot lets us do that in a pretty clever way, so that you can put extra stuff in the transaction, but it's only there. You can reveal it later if you need it. So the classic one, it actually turns out to be really good for Lightning, where in the normal case, it's you and me, we set up a channel, and if we agree, it's all good. It just looks like a single transaction. But if there's any dispute, then we go, oh, well, actually, there were these extra conditions, see, and here we can prove that they were in the original transaction. Here they are, and we're going to use those now. So that's actually pretty cool for Taproot. But it's a really geeky thing. It'll make us, it makes the geeks really excited. But from a user point of view, it's an upgrade that will hopefully happen in the next 6 to 12 months. And they'll start to see a new address format come out on the network. Instead of BC1Q, it'll BC1. No, it'll still be a queue, won't it? The first 5 bits will be. Anyway, the addresses will look very similar to modern addresses. You probably won't even notice. And, but, you know, they'll have this cool new stuff. People will start using it. You go, well, that's really great. Again, cheaper transactions once we start using it and stuff like that. So all good. From the Lightning, so what else is happening? The Lightning stuff. Oh, there's so the further you get away from, so Bitcoin has to kind of move slowly and not break anything. Higher up, like in Lightning, we don't need global consensus. Everything else, Bitcoin moves underneath us quite slowly. That's good. We use Bitcoin, and then you know we can build stuff a lot faster on top of that. So on our end, there's like a lot of exciting stuff happening. The one I'm most excited about that I'm working on right now is this idea of Lightning offers. So Lightning, the way it works is you give me an invoice, I pay it. Very standard flow, but it's also quite limited, right? If you're selling a subscription, you want me to sign up to pay for it every month. And at the moment, that literally means you have to give me a new invoice every month, right? I have to visit your website, get a new invoice, something like that. With offers, it's kind of a level on top. And offers basically says, hey, here's where you go to get your invoice, and it's every month, and this is how much it is, everything else. And then you actually reach through the Lightning Network itself to fetch the new invoice. And that's really powerful because vendors really love recurring payments and users really hate them. Because at the moment to get a recurring payment, you sign up for something, then you've got to get them to cancel it and stuff. It's a huge hassle. In the Lightning world, recurring payments are the other way. The vendor goes, here, we want this one payment once a month. You tell your wallet, sure, we'll accept that. But at any time, you can stop it. It's entirely driven by you because you're the one pulling an invoice from them every month. You just have to stop. You tell your wallet, no, I've decided not to do that anymore, and it ends. So you get the convenience of a recurring payment. You don't have to remember it yourself, but you get the control of a system where you're always having to push money out. In a credit system, you can pull money, but in an actual cash settled system, you effectively have to push it. If you're sovereign, by definition, the only way you could spend money is if you approve it. So that's actually pretty exciting, and it enables a whole heap of new use cases. There's a number of other things about offers that makes them actually pretty convenient. You can print out an offer, have it like a QR code somewhere that's actually literally printed out, and you can just have people pay it because they will actually get the real invoice through the network underneath the covers and work that way. And it's a criticism at the moment. You can't have an invoice on your website at the moment, like a static one, for a tip jar, because invoices are single use. So either you have to generate one for every time someone visits, you have to have a click through or something. So it turns out that it solves that problem. Offers are forever. You just have it on your website and you go. And frankly, tipping is actually really something that people love doing. People love sending stupidly small amounts of money to other random people. Sending someone 5 cents over the internet feels like a superpower, and people love doing it. So,
and absolutely, the applications for that are awesome. Like you think about an internet that's not driven by advertising as a default. It's driven by you visit a website, use a service, whatever, you interact with someone. There's a tip option right there, very easy to use. It's tied to your Bitcoin, it's tied to your wallet. And you can tip them, and you can, maybe is it a fixed amount? Maybe it is some sliding scale. You can pick something, but an internet based on that is so much better to use, so much more enjoyable. You get the enjoyment out of tipping someone, and you don't have to stare at a fucking advertisement. So, the benefits are great of that sort of thing.
I'm being signaled to, and I have no idea what game we're playing. I think it was 5 minutes, maybe. No. Oh, can we check the chat? I don't know. Can we?
Let's go over here.
Signature aggregation, when is it coming? Okay, that's a deep dev question. I've alluded to it. I really want it. Everyone's concentrating on Taproot at the moment. Signature aggregation will be is the next thing everyone wants. Well, okay, signature aggregation and hash no input, or sig hash no input, or whatever variant we get, are the two things that are kind of in the line, in the queue behind Taproot, right? So I don't even know when Taproot is coming, right? First, it's got to get the final proposal. The code's got to get merged, which might happen soon. I don't know. And then we have to figure out how to activate it, right? So in Bitcoin, it's a consensus network. Everyone has to agree on upgrades, which means that, we pretty much have to go through this whole thing where we, figure out how to activate it. And then we talk about the next steps, right? So you've asked like a question behind a question, and I don't even know when the first one's going to come. So soon would be great. I think signature aggregation, as I alluded before, is really important because it actually is a massive pro-privacy move. It basically gives you an incentive to coin join. Beautiful. Crams more transactions in, all good. But yeah, I'm not even gonna tell you 2021. It could be 2022.
All right, so we got a big tail end on that one. Cool. John, do you have anything else from maybe any of the Sydney side guys that hang out in the Sydney Bitcoin meetups? Any developers in that space? You've heard anything from them that you want to talk about? I got yourself muted, mate. Still muted, mate.
You are muted, John.
Oh, sorry. As I said, sorry, there we go. I don't think I could possibly improve on what Rusty is, or the rundown that Rusty has already given us there. In fact, it's got to the point where we actually have had Rusty as a guest at our own meetups in Sydney to give that perspective. So looking forward to having you again when all this COVID nonsense is over and done with.
Yeah, I'd love to. And I do recommend, actually, the Sydney meetup was a lot of fun and really informative. So if you're in Sydney, I would definitely recommend checking it out.
Cool. All right. Still just on the topic of development, anything from the exchange side of things, Jeff or Alex, anything in regards to exchange development, any new stuff coming on down the pipeline for you guys?
Alex, you want to go first?
Jeff, I'll let you go first, man.
You need to do what we're doing, basically just answering to users' demand. So yeah, I mean, reach out to me, reach out to anyone from our team, give us feedback. That's all I can ask from you guys. Yeah, I mean, we just revealed the new Australian-centric homepage. That's just pretty new. It's binance.com/au. Just check it out. And that's also based on some of the feedback from the previous variant of it. It just makes everything more user friendly. Yeah, I mean, we just continue to build more user friendly products because we are very user focused we are on a very user focused mission over here in Binance Australia.
Cool. And probably the big thing on our side is we've been working on a slightly more advanced version of Amber, which we came up with the idea last year that sort of, it was always on the back burner because we're a small team and we've just been working on stabilizing, the Amber Basic product, but it'll be called Amber Black. It'll be a little bit more premium and it'll have just some cool features like they'll, instead of paying an exchange fee, it'll be, 100% free to, buy and sell as much Bitcoin as you want. And obviously, you want to buy more than sell. And instead of paying an exchange rate on every single purchase, it'll just be a membership fee. So you just pay a monthly fee for that. You'll get also a couple other cool features like, automatic Bitcoin withdrawals to your own cold storage. So that way we sort of, we want to give the best of both worlds because, a lot of our users, again, being new, they don't have their own wallet set up. So they sort of start with Amber, and as they, proceed on their journey, they end up getting their own wallet, and, we encourage self-custody. So like this, they'll be able to just set up their DCA automation and then set up an automated, withdrawal to their own wallet. And then happy days, like, they could be in fucking Timbuktu and they would know that Amber's sort of stacking for them and sending it to their cold storage. So that kind of user friendliness. We're also got some cool little features like we'll introduce probably limit orders at some stage on Amber Black. And the one that I'm most excited about, which we've been it's been in testing now for the last couple of weeks, is the auto buy the dip. So you'll be able to set a percentage move and a time frame and ask it to auto buy you if the Bitcoin price dips. So it's kind of to minimize the regret of, fuck, I was sleeping and overnight Bitcoin wicked down and I could have stacked more. So the idea is it will monitor and buy for you. So some cool features coming up. And I think that's sort of, we want to give people a place that they can start. They can start accumulating Bitcoin really simply, and ideally get their friends and family acquiring and accumulating Bitcoin and not getting confused by shit coins on things like Coinbase or CoinJar and all of that crap. So that's sort of first step. And then then as they advance and mature as users, we sort of want to keep them in that ecosystem, and give them some other features that you just can't get anywhere else. So that's probably the big stuff from us over at Amber.
Cool. Yeah. I mean, I personally quite like the idea of the feature of the wake up when it's when the dip happens, because you always find yourself very annoyed when you miss that one. Do you have any comments, Rusty, or do you want to tackle some of these questions we got through here?
So we actually got a couple of audience questions, and we finally figured out that that's what they were trying to tell me.
So the question is, can you it's just to ask about prune nodes? Can you expand upon prune nodes, what they are, and what the status is with those ones?
So a prune node is a node that has validated everything, it's checked everything, but it's thrown away most of it. So it doesn't need as much space, right? It has to download everything and check it, but once it's checked it just throws everything away that it doesn't need. And that currently conflicts with the way Lightning works. So with Lightning, you can't completely prune your node, although we support a prune node option. There's a kind of a hacky way to do it in C Lightning, but making it a first-class citizen is important. And there's a couple of protocol revs. So prune node support will definitely be coming, so that you can, again, because it's important that more people run nodes. And we don't actually care if you run a prune node. It is a full node. It's just, the difference is that because it doesn't know all the history, because it's thrown the bits away it doesn't need, then another node can't connect to it and get all the information off it. So you do need some nodes that have everything, but prune nodes are just as secure as a full node. They did check it all. They just threw away the bits they didn't need. So prune nodes are important just for, it makes it easy to run a node, right? Sure, you need to download 400 terabytes at some point, but you don't have to store it anymore. So that's kind of cool. And why is signature aggregation not coming with Schnorr and Taproot? Because Schnorr and Taproot, changes need to be slow and steady and compartmentalized. So if you don't need to make a change altogether, then you should definitely make it in stages. And this was a conscious decision with Schnorr and Taproot. It's like, okay, we really want this. We basically want Taproot and we want Schnorr signatures. They go together. It's hard. It would be awkward to separate those two, so we'll put them together. But in fact, we can do signature aggregation completely separately, so let's not even worry about it in the first cut. So it's always better to do the smallest upgrade you can, and it turns out that Taproot Schnorr is the smallest upgrade we can do. We thought we had to do Ccache no input at the same time originally, which was causing some worries, but then Anthony Towns actually figured out a way of doing it as an upgrade, which made everyone much happier. So that debate is still going. Port forwarding the nodes. That is a statement, not a question. So I'm not quite sure where that, if there's a question in that thing that I'm reading on the chat.
Just we'll do some final Q&A in a moment. I guess while we're waiting for that question to come through.
There might be one more thing I can add to my answer from before about developing. For those that are not aware, at Bitcoin Sydney, we do actually run every month a thing called the Bitcoin Sydney Socratic Seminars. I know Rusty's been involved with those. So Stefan Lavera, he runs the discussion, but that's a highly technical, developer-based discussion. The next one of those, just looking here, we've got lined up for the 20th of October, 7 p.m. Sydney time. So, so that brings in technical expertise from all around the world. It's so certainly much more than what would be available to us at a normal meetup if it wasn't online.
Yeah, and I really enjoy those. So if you're technical, I would definitely, on the technical side of Bitcoin, they're fascinating. I'm not even sure I understand all of it sometimes. There's some pretty heavy stuff in there, but it covers the whole gamut, and it's definitely the place to catch up with the bleeding edge of what's going on.
Awesome. Cool. So what we'll do is we'll just do a final word from everyone, round robin style, and then we'll go into any questions that have come through, and anyone in the audience wants to ask a question. If you had to if you could recommend one thing that we could do locally, or you could help your friends and family do in terms of Bitcoin advocacy and sort of getting people into it, what would be your recommendation, where to start? If you were talking to, whether it's literally your mum or your dad or your sibling or your friend, how to get them involved, how to get them started, what's the best way to go about it that's going to ease them into the whole world of Bitcoin? So yeah, we'll sort of go around the room if we can. We'll start with you, Rusty, first. Yeah.
Oh God, make sure you got a copy of their private keys or their seed, because they will lose it. And there are actually services now that will walk them through this process. Like Casa is the best known one, where you pay an annual subscription fee, and they will help you sort out all your keys and everything. They won't hold them for you; they'll actually hold one part of them potentially, but they will help you with all these questions of, so how do I store this? Like, what bits do I need to write down? How many of these things, how many copies should I make? Where should I put them? All that stuff. They're experts in that, and they will help you. I haven't used their services myself, but I have heard good things about them. And that's basically their business. Their business is to help you securely store your own Bitcoins. So if my parents were to come along, who, the retirees, which means they've got too much money, right? So they probably would be buying $10 a Bitcoin. So for them, a service like that would make sense. Friends and family, just keep a copy of their keywords, their seed words, so that when they lose them, you still got them.
Great. Awesome. All right. Jeff, any final words, any final plugs regarding helping people make their first steps into Bitcoin, mate?
Head on to binance.com/au. I was just kidding. I think it's very important for people to realize the journey themselves. Because like Rusty says, that it's important to teach them about the correct practices, but at the end of the day, this is Bitcoin. Everyone, should be able to not just trust, but to verify from their own. And from my experience, I just find that I spent a lot of time early on convincing people a lot of this kind of stuff, right? But at the end of the day, they just have to try what's on the other side, once or twice, because everything seems to be so colorful and exciting before they actually realize that ultimately there's only one king, right? So yeah, I mean, doesn't mind to have everyone try out different things as long as they know what they're doing. So I would say, yeah, just enjoy the ride. Don't fixate too much on profits or too much on ideology. I think it's most important is just to have fun and to learn new things, because ultimately that's only one way someone in the crypto world would lead into eventually, giving them time to go back to the king, right? So yeah, just keep it easy.
Awesome. Thanks for that, Jeff. Alex, we'll go to you, mate. Any final words, any final plugs?
Yeah, I guess, half jokingly, I think if you got new people, fundamentally send them to a product that won't confuse the shit out of them. Because I think, from my experience, helping people understand that, the initial driver is to, have a functional savings mechanism that can help them, save money for the long term, is an important thing to have. And especially just against the backdrop of like a world that continues to madden. Like, I'm over in Europe now, and the clowns over here, because it's getting cold, they're sitting there wondering, oh, how is everyone getting sick again? It must be Corona's come back. It's like, you moron, it's cold. Like, it's the world's getting continuously dumber, and there is a good proportion of people who fundamentally are starting to ask more questions, and they're going to want to protect their wealth. So I think we all have an obligation to sort of send them down the appropriate path, and that's why we've sort of always been Bitcoin only from the beginning. And I think if you've got friends and family, this is going to sound biased, but I don't give a shit. Don't send them to Coinbase. Don't send them to CoinJar. Don't send them to shitcoin casinos. Like, get them onto an app. Get them some skin in the game. Get them some Bitcoin and help them along that journey initially. And as they sort of go into that, like with a little bit of skin in the game, they will do their own exploration. They'll learn about self-custody. They'll learn about all that sort of stuff. But get them started, and that's sort of why we built Amber the way we built it, is to to get people started, and have to not have an excuse that it's too hard.
Cool, great stuff there, mate. All right, John, any final words, mate?
Yeah, look, one of the ways that I try to convince people that they should be really looking seriously at Bitcoin is to show them how risky fiat money is. Forget about the days when Bitcoin was risky. Okay, there's some risk, but it's not what it was in terms of the idea that it might go to nothing. I think that's vastly less of a chance of happening at this stage of the game than it might have been back in 2013. But when it's looked upon as fiat is risky, and therefore if you have a significant amount of fiat, then you should be looking for other ways of holding that wealth. Then Bitcoin, in my view, now has reached the point where I believe it's less risky than fiat, especially with what's been going on in the world with the rampant money printing we've seen in response to the economic downturns caused by COVID. So having said that, then when it comes time for, if it was family, then I think I echo what Rusty says, in that they very often just say, oh, can you just do it? And I know that sort of defeats the purpose of Bitcoin, not your keys, not your coins and all of that. But I think at some point on a family level, human beings do naturally trust each other. But to the extent, though, that not that I don't encourage people to be able to do them themselves, but I think it's better that in cases with family that I essentially run the solution than say them leaving their coins on an exchange. That's the main thing to avoid, is saying just get the coins off the exchange at the very least. When it comes to friends as well, I think it's also important to raise the idea of dollar cost averaging. That's something that in Sydney here, Hass McCook has pushed very hard in the work that and evangelism that he has done, and of course Amber is an ideal a place where you can send people to do that, because as I said, they don't distract you with all sorts of other stuff, and their messages. The guy that runs it is singing from the same hymn sheet that we are, so they're going to get the right message, and of course there's all sorts of mechanisms that they can do that. So if you're dollar cost averaging, then it doesn't matter when you got in. Even if you started doing that at $20,000, you very quickly ended up financially ahead because of the cheap coins you then got later on in 2018. So yeah, for people who are still working and are making money, put a bit away each week. Use a service like Amber and the other companies that offer that. And for people that have got savings, then you might need perhaps a lower percent. I don't know what a way of maybe with less slippage and way of buying more of it at the one time. And as I said, get them off the exchange, get a hardware wallet, keep them in that. And if you must, then, go to that person in your family who's the tech guy and get them to do it. It's not, you should learn to do it yourself, but even if it's just your trusted family member helping you out with it and keeping a copy of your private keys, it's still better than them being on the exchange, or worse yet, you losing them. A lot of Bitcoin has been lost because people have lost the keys, or have tried to set up some overly elaborate scheme in order to secure them, and have lost part of what they needed to get the coins out. So there's a balance for somewhere, and everyone, depending on their own ability level, is gonna have that particular point.
Great, thank you. It turns out hiding your seed phrase like at the top of the dunny, like where no one's ever going to find it, is bad if it ever backs up and overflows. So I'm just saying, don't do that.
Just out of my own curiosity, what actually happens to someone who's like, you hear the stories of someone's lost a hard drive in the rubbish dump, and it's supposedly got some Bitcoin on it. Is that sequence lost forever, or can it be recovered? Yep.
No, it's done. It's gone.
Yep.
So yeah, those coins are gone, which by definition, right? I mean, this is the whole point, that no one else can steal your Bitcoin, even you. So yeah, that's right. And then you can't even prove it, right? I could tell you that I lost my keys classically in a boating accident, but the only way you can find out that's not true is, even if the coins move, I could say, well, someone must have found them, right? So yeah, it's impossible to prove that kind of negative. But yeah, we do know that coins have definitely been lost through lost keys, right?
Yeah, there was a high-profile case where I think it was the guy was in England somewhere, and this came up in like 2014 or 13 when the value was like $1,000, and the guy knew he had like $1 million locked up, and it was actually countenancing tilling the rubbish dump where the garbage truck was likely to have tipped the load for that area on that day. I can only imagine what he must be thinking when the price reached $20,000, let alone what it might be sometime next year, and perhaps what the cost-benefit ratio might be of actually going ahead with a plan like that and trawling the entire rubbish dump for a hard drive that may not even be able to have its data recovered from it if it's already been through the crusher.
Yeah. Cool. All right. We've got a question that's come through just asking for any new updates on the Lightning Network for next year. So next year's roadmap.
Lots of cool stuff. Yeah, I'm particularly concerned about privacy. I think our routing is going to get more sophisticated to try to, less predictable. I think that's important. Privacy is a big issue on the Lightning Network. Just all across the board, we're seeing like UX improvements. We're seeing a whole heap of things. When Schnorr finally rolls out, we have to like move to get on top of that because it's kind of cool. And then when we get Ccash no input, we get to do another major rev for that. So yeah, there's a lot of stuff going on. One of the concerns is at the moment, if you just want to be if you want to be that guy, you can make a lot of grief on the Lightning Network at the moment fairly cheaply. So making those attacks more expensive. You don't really gain anything from it, but you can jam things up a bit if you tried hard enough at the moment. There are a number of efforts going on to make that more difficult, right? Just make it harder for people to do that. So robustness improvements, things like that. But yeah, most of the improvement you'll see will be at the higher level. UX improvements, better wallets, things like offers that basically look to you like an invoice, but it just, it simplifies a whole heap of different flows and gets us into different areas. So we're just kind of still building out the tech. And, so off the top of my head, there is some cool new stuff, but I think the most interesting stuff is the stuff people are building on top of it, right? The services that people are building on top of Lightning are really interesting. Gaming seems to be particularly big, and I'm interested to see where that goes.
Great, excellent. All right, we've got a couple minutes left. Are there any questions from the audience here that want to shout out to all the guys online? Any questions? Cool. Oh, yep. I'll run the microphone out to you, mate.
Yeah, you need to speak into the mic, otherwise it doesn't go through the feed.
Yeah, sure, no problem. Hey, John, it's Daniel Wilczynski here.
Yeah, Daniel.
Hey, I just want to ask you, I was really curious, what's that computer in the background on the left behind you?
Oh, it's an old Apple IIe.
Okay.
Nice.
It works.
Okay. Do you have any Bitcoin on it?
Oh, yes. I was thinking of trying to see if we could run a Bitcoin node on there, although I think it might need a bit of extra help.
Okay. Cool. Okay, that's my question.
Okay.
The answer is no. You don't have enough RAM, even for the UTXO set.
That's the way we might need a bit of expansion.
Yeah.
All right, excellent. Well, that brings us to 8:30. We've got one last question. What can you say about Square putting their reserve assets in Bitcoin? Any others following suit?
Sweet. Yeah. So I think you we actually covered that earlier on. I think there were some good points made. And I did kind of nuance this move, particularly for Square, because Square already, of course, holds a lot of Bitcoin. And we don't actually know, other than the fact they said they're holding 50 million Bitcoin. For all I know, they were holding 40 million before, and they decided to up it to 50 to make a nice round number, right? So they obviously have a float available anyway. So putting their reserve assets in Bitcoin is not a correct characterization of them announcing that they have 2.5% of their cash in Bitcoin, because they do. Cash App sells Bitcoin, so they actually have to hold Bitcoin. So it was more a signaling thing, right? So will others follow suit is a really good question, and that's like a $1 million question. And I promise you, I don't know.
Time will tell. Time will tell. Awesome. All right. Well, that brings us to the end. So thanks very much for joining us. We'll give a quick round of applause for the guys joining us online as well. So thanks very much for that.
Thanks. Great to be here.
Awesome. And enjoy the rest of your evenings. Thanks very much.
Thanks, peeps.
Cheers.